Mr. Vendetta, welcome to the show.
That's right. It's good to be back.
Yes, welcome back. Welcome back.
Jake, welcome back to the show.
As always.
Yes, welcome back.
MCG in the room, we don't fake the climb. Every chalk got a scar, every lesson got steel. I'm not here to pose, I'm here to dig. Pull the truth from the noise, make the signal big. We take the call, then we take the risk. Cold hard facts with the pressure and the twist. No costume, no gloss, just the work in the frame. MCG in the feed, and the market know the name. Run it up.
All right, happy Friday, everyone. Welcome back to MCG Live this week. Today we have an interesting day. We have the first sealed bid auction on today with Crafts, as well as the Ace rounds by METALEX. So a lot of exciting stuff. And then Fraudsworth on as well, which is one of the experimental financial experiments out there that has been pretty interesting and looks like it's made a bit of a comeback. So a lot of interesting stuff. But before we get into it, let's go. What's up, Christine? Before we get into it, I want to cover something that's urgently happening in U.S. stocks right now because we definitely started to see positive momentum in crypto, and I think people are getting pretty excited. Markets were warming up a little bit from the ICEMAN, if you will. Sorry, I'm just gonna play around here with this. Okay. So Koblasi is talking about US bond yields rising, and this affects every part of the economy. And essentially, bond traders, what they are doing is sniffing out inflation that is coming from higher commodity prices. It's not just oil, there are other input costs. But if you think about how your food gets to your table, if you think about how the CPI basket is calculated, housing, food, transport, oil prices, etc., or energy plays a big role in all of those components. And despite the efforts of the United States, releasing strategic reserves of petroleum, all this kind of stuff, the Strait of Hormuz remains closed. Oil is still up $100 a barrel, and I think 110 on the Brent. And what we're seeing is bond yields are going up. Overnight in U.S. and Asian stocks, a large part of the indexes got absolutely pummeled overnight in Asia. So a bit of pullback happening. Furthermore, the market sees a 60% chance the Fed's next move will be an interest rate hike. I mean, the thing is interest rate hikes won't solve the energy crisis. We still cannot get oil to market, and raising interest rates is not going to solve that problem. But here, 7% mortgage rates, auto loan delinquencies. We've been and I've been talking about this for the last few months on the show, is seeing interest rates go up. It affects basically everything. We have a highly indebted societies in the West, both in the government, but also private wealth or private household debt is pretty high. And again, everything is going a bit higher. So not ideal. And here's the 3-year yield on, this is the Canadian 3-year government bond, but I mean, the US yields are basically identical to this, but going up and kind of breaking out here. Obviously, oil's just hasn't been able to break this 50-day area, and potentially could spike here. So we'll see. Other than that, I mean, we got the 82 and then pulling back a little bit. ETH, Bitcoin all looking kind of the same. ETH kind of cracking down below that 50-day moving average. Got the flip, but unable to break the 2400 area. Hype. I put out a video, so go to mint_Josh on X. You'll see my thesis there. And this one, again, I told you guys, if you see this in the 30s, it's a great entry, a good area to enter. And then yesterday, Coinbase said they are going to do USDC deposits on Hyperliquid, which is extremely bullish because if you've ever used Hype, it's extremely difficult to get assets onto the platform. You got to bridge to Arbitrum. You got to know how to use Web3 wallets. Well, most traders don't. Most traders just want to go to Coinbase, bridge some funds over there, and then mint them on Hyperliquid. So good sign there. I said hype could be all-time highs by the end of May, and I got 2 weeks left on that call for that to come true. But not ideal, but hey, look, this market has marched absolutely like I've never seen any marching before. I don't think I've been trading stocks since I was 17 years old, and I'm a lot older now, and I've never seen anything like this. So this is pretty wild. So anyways, I'll leave it there on that.
What's up, Josh?
Dom, my guy, how you doing?
Doing good, man. May 15th, big ICEMAN day. Big day for Toronto natives. You guys must be buzzing.
Yes, buzzing. And I wish if I didn't have kids, I'd definitely go down to the CN Tower. It was like covered in ICEMAN. Lot of Drake stuff going on here in the city. City is buzzing, fireworks, you name it. But Dom, I was listening to ICEMAN this morning. I don't know if you listened to it, but there is a song on there. All of a sudden, listen, I'm hearing FTX, I'm hearing Sam Bankman-Fried, I'm hearing all sorts of crypto things. So I mean, Drake definitely.
Can you rap it for us?
Yeah, right. Absolutely not. The only Drake songs I know are old school. Yeah, guys.
We in Miami, we had a nice little Drake listening party. You and I,
we
throwbacks.
We did. We some throwbacks. So yeah, man. What do you think?
I think we have a great day for streaming today. We got a few things we're really interested in on. I'll start from the back. We got Fraudsworth coming on at the very end today to talk about their mechanism and system. We've had them on before. It's holding up really nicely. Call it a Ponzi, call whatever you want. It's actually holding up really nicely. It seems to be working as intended. Just needs a bit of volume. So kind of catching the updates on that at the end of the show today. Prior to that, we're going to have METALEX on to talk about their ace round. This is the first time they're coming on stream in public and talking about this ace round. There's a lot of questions. Can it be tinkered with? Can it be for pre-ICO tokens? Again, ace round is the conversion of tokens to safe agreements. Right now, live, we're about to have Refi on, who's doing the first ever bid sealed auction on Solana. Now, we're going to get into more about what that is, how that works, and then what Refi is and how they're utilizing this. But they're utilizing Crafts, who's as well utilizing Archeum for the privacy aspect of it. Shout out Crash, shout out Archeum, and shout out Refi. They'll be the first guests today. So without further ado, I think it's time that we pull up Christian from Refi to give us the full scoop on what's going on here. Energy is hot. Josh was just talking about oil, why it's important. Lots of people are trying to get their hands on energy. Refi is doing that. So let's get into it a little bit today. Christian, welcome.
Hey guys, great to be with you.
Good to be with you too. I'm wondering if you could, is there any way to get that volume a little bit louder? You're a bit quiet coming through on our end.
I can try without headphones. 1 second.
Yeah, no worries. Just wondering. If not, it's all good.
How about now?
Not much better, but let's run it anyway. And
here, I'll boost. Yeah, I'll boost his audio as much as I can. All right, go for it.
Christian, give me one more test.
Can you guys hear me well?
Okay, there we go. Good boost. Yeah.
Leaning in helps. Yeah.
Yeah, leaning in helps.
Leaning in and boosting. Okay.
There we go. Christian, we're excited to get this conversation on the road today. You guys are doing something which is a first in Solana history, which is this bid sealed auction. You guys went with Crafts as like your launch pad, curator, incubator, accelerator, whatever you want to call it. And we're really excited to get into Refi because we know energy is such an important vertical, and how you guys are doing it and tokenizing it and making it available to holders, I think is a really interesting conversation. Do me a favor. Let's start with you. I want to kind of get a better idea of, who Christian is, how you got into this world of energy, and, where that puts us today. And after you're done with that, when we get into the bid sealed auction mechanisms of it, we'll pull up Phil up here from Crafts to help us walk through that as well.
Sure. So, yeah, it's a funny story the way I fell into this, but about 4.5 years ago now, I kind of came into the Solana ecosystem with a project called Coral Tribe NFT. We minted out and sold out the collection at during that kind of NFT high time. And it was the first collection to sell out with a sustainability mission tied to it. So through that project, we created a community impact fund, and that led us to ask the question, where should we invest this USDC? Where can we actually put it? And there weren't really many options to put it in things that aligned with sustainability or things that really were real world assets, things out there in the real world. And energy infrastructure was a category that we kind of had our eyes on for some time, and we slowly started getting exposure to solar energy in particular in Brazil. That was where our first connections kind of came up and where it all started. So we tokenized the first solar project ever on Solana. It was a small solar plant in Brazil, and it seemed to work quite nicely, uncorrelated to markets, under a PPA. So it had a kind of power purchase agreement, which basically means there's a set price for the energy to be sold. So it's something very predictable and very stable, and making a positive environmental impact. So from that, the whole thing kind of scaled up. We're like, okay, let's keep doing this. Let's open it up to more people, and let's create that on-chain finance layer for this, for the kind of solar boom and the next wave of energy infrastructure that needs to get implemented on the ground. So that was kind of my way into all of this.
Very nice. Well, you were perfectly positioned because energy has certainly been booming. But I want to talk a bit more about refi and how you're feeling in terms of RWA. We had Crafts on and the Crafts team, as well as the Slabs team yesterday, and they're doing a lot of tokenized trading cards, right? And we're seeing this TCG boom. And maybe you're unrelated or uncorrelated with trading cards, but I think in one way you do relate, in the sense that we're seeing tokenization of typically illiquid assets happening on Solana. To kind of set the floor here to talk more about refi, I want you to tell us how you're thinking about illiquid assets being tokenized on Solana and kind of the future of RWA. Has this TGC boom kind of been a really validating point for RWAs, and do you think we kind of just scale from here?
Yeah, I think so. And, I was at RWA Summit earlier this year in the south of France, and it was really clear that T-bills and credit are the biggest kind of RWA players right now, and they have that kind of liquidity component. Energy infrastructure has a similar TAM. It's got a similar total addressable market, right? It's about 470 billion invested in it last year. But it is generally quite illiquid in the real world. Even funds like BlackRock's Clean Energy Fund, it can take a year or more for people to withdraw from that. So it is quite an illiquid asset and a very long-term asset. So bringing a liquidity component to that obviously kind of supercharges it and, brings it into that kind of more appealing realm for people. So the way we've been approaching it is tokenizing operational solar plants. So tokenizing operational assets that kind of have a history already. And what we're about to release now, because the current assets are illiquid, right? They'll be tradable on a P2P market, but they're illiquid. They're 9 to 20 year deals, and you get your monthly payment in USDC. So the big innovation that we're about to release now is Vault, and we might get more into this a bit later, but this is basically a liquidity layer for all of this energy infrastructure. It's a basket of diversified energy assets that sit under a single token, and that token appreciates over time with the cash flows from these energy assets. So it's a very, in a short way of framing it, it's a very simple way for users to hold one token and get exposure to some of this clean energy yield. So that's what we're quite excited about. And the benefit of this, it's got a reserve and liquidity mechanism. So it's a semi-liquid token, so to say, with a instant to 2 week withdrawal period.
So I think this is really interesting. I love solar and energy type projects. I think this is kind of fascinating. I've looked at this space for years and years and years and always been fascinated, but there's never any way to invest in unless you put it on your own personal house. I think what I want to know is before you guys were doing this, who would be the kind of financier or owner of these assets? Is it always utilities? Is it always government? Is it private entities? Like you said, you operate in Brazil. So within that context, who owns that before? And then now you're offering the public access to this as well. that correct?
Yeah, I mean, there's many stages to kind of a solar plant. There's the pre-build stage. So sometimes there's financing to actually build the plants, and they're called kind of bridge loans. And it's a mix. It depends on what country you're in, but it's a mix of private and public. Where we're specifically focused, which is Brazil and Singapore. Singapore is really a big focus region for us as well. It's mostly private companies that own these solar plants and use these solar plants to actually power some of their operations. They might export the rest of the energy to the grid, but they're using them to power their own operations, and we're coming in there to tokenize those. So the people who would traditionally own these it's often the solar operator themselves. They might be getting just credit, so they actually are the owners of the plant, and they're kind of sorting their funding needs through credit. Or it might be just private institutions or energy funds, sometimes family offices and stuff like that getting involved. But it is quite limited and difficult to get into this space. And there's usually minimums of, $2-3 million to just enter into a ticket. And it's quite an inaccessible, closed off private market for the average person that just wants to kind of invest in it in the same way you'd invest in gold. And that's kind of quite accessible today, right? So that's part of our goal. It's to really open the door and, be able to just buy energy yield or access energy cash flow at your fingertips.
Could you do me a favor and talk me through some of these live examples? I'm on the website here and I can see, different properties you guys have or different assets, I should say. There's some interesting stats here, right? Solar infrastructure pipeline, 35 million, 50 plus active platform investors. Can you walk me through, I guess, a practical real life example of this working?
Sure. If you actually click on energy assets, I can show you a specific one. If you go to the very top of the screen, it's next to the Reefer Hub logo. If you click energy assets, yeah, exactly. And you can actually just click on, that first, the FLP2. So here you can see the different energy assets we've listed. FLP2 is an example of the most recent one we did. So this is a solar plant in Singapore in kind of an industrial area. A lot of the great solar opportunities are in these industrial areas because that's where, people require that energy. And this is basically a 9-year deal where investors are getting a percentage of the revenue generated from the solar plant and also a fixed baseline. As you can see here, we listed this quite recently. So the last payment was April's payment, which came in. So you can see all the actual transactions on screen. This was 100K ticket size, and it's averaging a yield of 21.4% at the moment. So that's the amount investors are getting per year on what they put in, basically, right? If you go up a little bit as well, you can see all the details of the plant here. So we include, you can click on documents on the far right. So we include all of the kind of contracts and invoice and billing history. So investors basically get a very transparent view into the due diligence processes and all the key documents that are kind of behind the plant. So that's kind of how an individual deal works. It's all settled on USDC on chain. And if you want to understand the structure of it, it's when you invest, you receive a token, which represents a contractual revenue share to that plant. And whenever the plant distributes yield based on those energy sales, you get your portion of the total yield, right? So it's all kind of powered by a smart contract and very efficient in the way it distributes. So yeah, that's basically how it works. And kind of zooming out, and you mentioned the 35 mil pipeline. This is basically mostly in Southeast Asia at the moment. Singapore is a great space for solar because not only is it a very kind of sound jurisdiction with great legal enforcement and great business practices, but also it's kind of a bit of a tactical beachhead to get into the rest of Southeast Asia, like Indonesia, Philippines. So we've been building over the it's about 2 years now since we started building this pipeline, but we've been building up a pipeline across this region, finding some of those higher performing projects and making close relations with solar developers in the region that can supply these assets and are kind of happy to tokenize them as part of their funding strategy.
Hey, Dom, I don't know if you have a question on the mechanics here, but I definitely want to dive into these a little bit. It says it pays until 2035. So I just want to understand the structure here. This looks like an industrial building of sorts. You obviously, Refi is providing the financing through, I guess, investors here for this asset, but who owns the asset? Like, how's the actual structure of this deal work?
Yeah, so the owners of the asset are Pivot Green. You can see there some of their details in the information there. So they're a solar operator in Singapore, and the actual structure is that token holders, so investors in this project, basically enter into a legal agreement with Pivot Green as the investors and the owners of that contractual revenue share that comes out of that plant. So the actual structure is between the operator and the investor. It's a direct model in that sense. Refi Hub takes care of the actual platform and the deploying of smart contracts, which kind of make this all happen.
And so do token holders own the asset?
No, token holders don't own the asset.
Are they buying like the yield stream or the revenue stream?
Exactly. They're buying into the yield stream, and they have a first ranking charge on the collateral, which are kind of the solar equipment and the technology that goes into it. So if in the worst case scenario, they can kind of have that security over the plant.
Got it. And then when 2035 rolls around, are the initial like funds paid back, or how does it work? I'm just trying to understand.
So with this specific deal, every the actual there's let's call it a principal component, and then there's a revenue share component, and that's actually being paid back on a monthly basis. So every month it's being paid back, and by 2035 it will kind of complete its full cycle. So the full principal will be paid back at that time, and that 35% of revenue every month will from that plant will come into holders.
So it's principal back by 2035 plus the 21% annual yield. Is that correct?
It's back by 2035, but the principal is actually being paid back every month. A small portion of the principal is being paid back every month.
Okay.
And that 21% is the yield based on the principal and the variable payments, right?
Got it. Yeah. So it's kind of like a finance. Yeah. I understand that. Okay.
Could you also walk me through some of the risks involved with this? Because I look at 25 or 21% APY or average yield, I guess I should say. That's pretty juicy. I think a lot of people would love that yield. Like, what are the risks, right? Because there's no risk-free trade. Is this like, potentially if there's a hurricane that comes through and the power plant breaks or something, like then you're out of luck? Or like walk me through, I guess, the risk to reward on this is what I'm trying to get my head around.
Yeah, so the main risks, there's a few. One is currency risk. So this is happening in the real world in Singapore. So you've got to make sure that you've studied and understood the Singapore dollar, which we've actually strategically chosen because it's been appreciating over time and quite strong, but there's always a currency risk. There's a environmental risk, as you said, like there's a hurricane or whatever. All the plants that we tokenize are all insured. So they are all covered against all types of natural disasters and also any downtime that gets produced by those disasters. But there's always a risk that it takes time to get those insurance claims, and the plant has a significant downtime. So with any infrastructure that's generating from actual resources of the earth, there's always the chance that there's downtime on inverters and things need to be fixed and upgraded, right? So there's a month-to-month fluctuation on what you can earn. And there's also the risk of the actual operator. Will that operator still be around by then? Will they be in a good cash flow position? Of course, holders have that security over the collateral, meaning that if something happens, at least they can kind of get something back from the sale of those solar panels, which is a significant portion of the investment. But there's always the risk that the operator can go under, and that's why we also vet them in terms of their financials and cash flow and make sure there's enough of a buffer to make sure that risk is mitigated to a certain extent, right? So those are some of the main risks that come to my mind.
So when you're looking for projects to tokenize on your platform and raise for, I suppose you could say, are you guys doing a lot of the DD on the back end? Of course, everyone should do their own due diligence and research, but is this kind of in part where you step in and do all the checks and background?
Yeah, that's a huge part of what we do. It's like 30 or 40% of the business in a sense, because at the end of the day, as a platform, like our reputation is kind of everything, right? A few bad deals and it's kind of, you're just forgotten about and people just lose trust. So building that timeline of repeated on-time payments and cash flows is really important for us, and therefore picking really solid developers is really important for us. So that's something we do, and we kind of look at developers from many different angles across environmental credentials, their financial history, how their team is set up and organized, making sure we're not tokenizing too much of a single solar plant. So they have a strong incentive to keep that plant running. It's a three or four step process, which takes a few months per developer. And if they pass all of those protocols, then we kind of open that for a tokenization opportunity. Another thing is also that we've been very selective with the developers we've chosen because they all have quite extensive pipelines. So we're going for let's say medium-sized developers that have anywhere between 10 and 50, 60 million dollars worth of assets. So there's a clear growth path with each developer, and we're not kind of just doing these small little one-off projects. Like everything you see on the platform, they're quite low volumes when you look at the scale of solar and how big plants can really get, but they're basically little seeds or little pilot projects with developers who've got a much more extensive pipeline that we can kind of tap into once they prove themselves and, they prove they can make on-chain payments and this already works well,
So tell me, real quick on this, tell me from their perspective, when they're getting the cash and the investments, do they know that there's a crypto community fundraising situation on the back end, or are they just hey, ReFi's giving us the cash, we're paying them, and then they take care of everything else? How does that relationship, I think, look on their end?
Yeah, no, they're very aware and legally have to be to understand that. Yeah, there's a community of people investing stable coins into this from specific jurisdictions around the world, right? So that's very clear to them, and the way the legal agreements are structured are between them and the token holders. So it's definitely something they have to be completely comfortable with.
Got you.
Just looking through this, and I'm trying to ask these questions because I'm sure people who don't understand how these type of deals are structured have the same types of questions. So Freight Links is the off taker. That's I'm assuming the building owner or whoever's operating here. Are they paying, it's a logistics company. Obviously they need power, right? Are they paying a monthly fee? They're saying look, I'm trying to understand why they would do this. The trade-off for them is it's a high capital cost up front to put solar cells on your roof, right? So they're probably not going to pay $500,000 or whatever to do that. Instead, they go to Pivot Green and say, hey, we'll pay you monthly for energy. And essentially the capital cost of those solar panels and installation, it's spread across the length of the term. Do I understand the deal correctly?
Almost, but you're almost there. It's basically like Freight Links, as you said, the logistics company, they need their energy. So they say, then they don't want to put up that $500,000 for the panel. So Pivot Green come in and say, we'll put the $500,000 up for panels. Right. We know how to install it. We'll do all the maintenance for you. And we will give you a fixed price on that energy. So you don't get any of those energy fluctuations and you can have a very predictable cost to running your business, right? So they'll say, we'll charge you X for your energy and you just need to pay up per kilowatt. So whatever they use, they charge a specific rate, right? And they'll just pay up that rate on whatever they used each month to Pivot Green. And then where we come in, which is the next layer, is that Pivot Green also need capital to keep scaling. How do they keep building more solar plants? How do they keep kind of compounding their solar empire? Well, by tokenizing existing plants, they can use that money to kind of keep building and keep expanding their network. So that's kind of where we come in and offer investors some of the upside from Pivot Green's basically part of these solar plants, which enables Pivot Green to continue moving on and maintain ownership and a stake in these solar plants.
Right. And so there's 70, I think you mentioned this is 30% of revenues. So the whole installation would be like 600K or something like that, 500K. And then the 100K is financed by, refi in the community, just to confirm.
Yeah, that's correct. Yeah. And they're getting that portion of revenue. Yeah.
Okay, cool. I think I understand the business. Sorry, go ahead, Dom. I just wanted to make sure everyone understood.
No, super important for these investors and people who are going to participate in bid sealed auction here. Could I ask you a little bit more about this pipeline and the investors? Who are you targeting with this, right? This raise, for example, was $100,000, average yield of 21%, paying until 2035. Are you going and talking to institutional clients for this to, participate in these raises, or are these predominantly coming from like retail audience like myself, Josh, and whoever else is listening?
Yeah, for these first raises, we've now got 6 raises on the platform. The first, just to give you a bit of a macro, the first one 18 months ago, and then kind of been progressively listing projects since then between the like 1 and 200K, 50 and 200K range, right? So we've just started out with retail. It's just how we began in the space and where our kind of connections were to kind of get this off the ground and running. And there's a real desire for people, retail investors or high net worth individuals, to get exposure to these kinds of energy assets. So that's how we've started. But really, as this scales, there's 2 kind of important paths to outline. One is that retail investors actually want more liquidity. We spoke about this before. So that's where our Vault product comes in, which I can illuminate a bit more for you guys later. But that's that single token that I mentioned that appreciates over time and kind of bundles lots of energy assets under it. So, and people can come in and out of their position quite easily. So really that's the evolution, and that's where the retail side of the product is going. On the institutional level, now that we've started building this pipeline, we've actually started attracting a few small family offices and funds and capital allocators who have much bigger ticket sizes of like minimum 5 million, right? So they're definitely not interested in these smaller types of deals, and they're wanting different kind of terms. They're happier to have a longer hold period, and much larger type projects. So moving forwards, we're still going to be targeting both avenues and open to both of them. But for these sort of single asset deals on the platform, and it's probably going to be evolving into more more institutional investors. And then for the actual liquid Vault token, it's probably going to be leading a little bit more towards retail investors or more crypto focused funds who have a very high priority on liquidity as well, right? So
okay, now, I just understood it. John, I'm so sorry. I just understood it. So the fixed payment comes regardless of whatever that's paying the asset off. So over the term of 9 years, that's $87,000 against the 100K principal. And on top of that, the 35% revenue share, which is $1,000 per month, so 12K per year, is basically kind of the profits on top of that. So it's the combination of both those things, just for people to understand. Because I saw the fixed year payment, and then I get it now. There we go.
Yeah,
all right.
So there's a fixed
make sure everyone knows.
And a variable. But yeah, thank you for going all the way to get the full understanding.
Yeah. So it's about like 20K per year on 100K total, like 20K per year for 9 years. That's pretty good. That's all like 180K roughly over the lifetime of this agreement. So, okay.
Yeah. But, as I've alluded to, you need a bit of a long-term horizon for that, because you have to wait for that to, you need to wait a bit to get to your break even, 20K. And once you pass that, obviously, you're sailing. But, and, there are institutions that already do this and are very happy with these longer periods. But for the average retail investor, they kind of don't have such a long-term horizon. So hence the next level of our product, which is Vault. Yeah.
So I want to talk about vaults here, and I also want to talk about like the DeFi mechanisms that this introduces. Like you said, these long time horizons require people to lock up their money. Would there be a partnership with, say, Loopscale or someone where you can actually borrow against this asset because it is a hard asset, and then take that money and kind of loop it and do the whole DeFi mechanisms?
Exactly, that's exactly it. So Vault is a single token, and it's basically composable. So you're going to be able to do with it what you need to across DeFi. And we're already in talks with a couple of capital allocators and players as well who are quite well connected in that space, and yeah, they definitely see that use to it. So yeah, it's going to be giving a lot more utility and function to the actual asset in itself.
Got you. We're going to get into the bid sealed auction here and the sale that you guys have coming up with Crafts in a second. So whenever Philip's ready, we can do that. But I do want to touch a bit on these vaults. Can you just go into more detail on the full breakdown of what this looks like? And you said it's more liquid. You can shorten your time horizons. It's kind of like supposed to be an ever appreciating asset with maybe a basket of your top projects.
Yeah. Can I share screen? This might be easier.
That'd be fantastic. At the bottom there, just hit the plus.
Yeah,
and we'll pop you up.
Okay. Okay.
I see you.
You guys can see my screen. Yeah.
Yep.
Okay, so this is a bit of a sneak peek because, as I mentioned, Vault is not has not been released yet. We're planning to release it a bit later this quarter. But this will help you conceptualize it a little bit. I think sometimes seeing the actual flow can kind of help. So as you see here, this is like the token's price simulated over time, right? So it's slowly rising with the cash flows that are getting paid in from all those assets. Vault is composed of these FIT tokens, so these solar energy infrastructure assets, but it's also composed of a USDC reserve between 20 and 30%. So that helps facilitate some of the liquidity needs. And basically, if you buy in the token, so let's say you pay one, you're going to invest 100 USDC into this token. The price would be, according to this graph here in the simulation, at 1.02, right? And slowly with time, that would go appreciating in theory, right? You've also got an indicator of the average time withdrawal here, so you can kind of get a bit of an indication on how long it would take you to withdraw your money. So yeah, that's a little bit about it. Is there anything else you wanted me to go into a bit more?
Is this what you're raising for? Is this what the auction is for here coming up?
This is partly what we're raising for. So Vault, actually, part of Vault was funded by the Solana Foundation. Some features and components of it, which are open source. Part of the raised capital will go into kind of executing Vault and having it fully live and investable. The other key thing is we've actually attracted quite a lot of asset suppliers, so solar plant owners and developers across, in particular, Southeast Asia, and actually a lot of capital allocators as well. So for our business to really become more profitable and kind of cash flow positive in the near term, we kind of need time to bring together this big supply side that we've got and this demand side with the capital allocators we're attracting. So part of it's going on to boost that team on the due diligence section and on the capital origination section, just to have a bit more leverage and strength in these two areas, which are kind of fundamental for our business to move forward. So that's the direction. ReFi Hub has never really done a public or any significant raise. We've been bootstrapped for the last 3 years in total building, 1 year kind of in the dark and 2 years more publicly, but we've been kind of been bootstrapped the whole time. So there's only a certain amount of length that you can buy yourself by doing that, right? So yeah, it's basically a bit of a scale up a small expansion of the team. We're going to keep things quite lean because it's not really in our philosophy to bring on a lot of people, and we want to keep things quite automated and kind of efficient. So it's a little bit of an amplification of the team, and just using this capital to have the time and the resources to bring together this massive supply and demand side, as well as Launch Vault and any other project features that kind of come as part of this forwards movement.
Okay. We've gotten a really good overview so far. So what I'm going to do is pull up Philip now and talk us through the sealed bid auction here. And I'll pull up my video to give us a little prerequisite, and we can kick it off right after this.
Most token launches start the same way. A number appears. 30 million, 500 million, 1 billion FDV. Declared, and the market is expected to accept it. But in 2004, Google had a different idea.
Shares of Google, the company that makes the world's most popular internet search engine, went on sale to great fanfare today.
They ran a sealed bid auction. Every major bank said it wouldn't work, but it became one of the greatest IPOs in history. The mechanism was always right, but price isn't supposed to be declared. It's supposed to be discovered. ICOs needed to evolve, so Crafts built the sealed bid auction on chain. For the first time, every bid is fully encrypted. Not even the team can see who bid what. When the auction closes, it computes the clearing price from real demand. No signaling, no manipulation. One price, paid by everyone. Price discovery, the way it was always meant to be.
Sick video. Sick video. Philip, what's going on, man? We are excited for the first ever bid sealed auction that you guys are pulling up with here. Could you walk us through, I guess, briefly this video? Super cool video, but why you guys chose to go with this, and then we're going to talk a little bit more about Refi and how they're going to be executing the first ever bid seal auction.
Sure. Thanks for the introduction. Thanks for pulling up the video as well. Glad to be here. Yeah, I think the thing that we wanted to highlight is basically that is, in economic theory, sealed bid auctions are already established, and that we have seen in TradFi that it has been established by, the US Treasury auctions, by Google's IPO. And so there's a lot of what goes into sealed bid auctions being the gold standard in TradFi, and also showing why it wasn't possible before on-chain, and now us making it possible to execute a sealed bid auction on Solana for the first time ever.
You guys chose Refi as the first project to come and do this. Is there a prior relationship you guys had? How did you guys come to this decision? Was it just, alignment in terms of this is a great project, we really like the direction they're headed in, and then, from Christian's side being like, look, we really like this mechanism here and we want to take this on chain, since we are kind of, dealing in stable coins and crypto native rails?
For sure. I think we actually interviewed over 200 startups, and we already knew Core Tribe from before. But just in our pipeline, we wanted to have something, tangible as well that you can't currently access. So I think there's a lot of tokens around, agents, a lot of tokens around other topics. I think RWAs, classically, if you look at RWAs and how you can access RWAs, a lot of the, big ones like Figure Markets with their Prime or others, you can only access their yield through Vault, but you can never access the equity layer of these projects. And some of those are multi-billion-dollar projects. So that's why we thought, okay, this is a very interesting asset. And I think Refi Hub is a very strong team that knows exactly, which market they want to target. And I think you've seen that today. And then, we just got into talking about setting up this race through our stakeholder token standard. And I think Christian can talk a little bit more about why they chose Crafts.
Yeah. So, okay, maybe Christian, I'll bounce this back to you then. Why did you guys choose to go with Craft on this raise?
Yeah, so it actually all started with a warm intro. Like, we were working quite closely with Bonk Advisory on a few things. And I think they met Crafts at an event in London, or I'm not sure where it was, but they introduced us to Crafts and said, hey, this seems like a really interesting way to raise. They knew we were looking to raise at the time. So when we kind of understood a bit deeper, like what the implications of the sealed bid are in terms of the fairness and the market setting the price, and and also the kind of real ownership, because to be transparent, we were actually approached by MetaDAO a few months back, and we were considering it, but we just did not align with some of the legal implications of doing a MetaDAO raise and having a DAO basically own the IP to your company. And then if something didn't go to plan or the DAO did not align with the direction of the company, they could basically kind of take that away. So we felt that was giving away too much power to and taking too much power away from the people who are like in the company doing the day-to-day things, right? So the Crass model was a bit more refreshing in that sense, and the kind of real ownership of the tokens representing that safe agreement was something that aligned really well with us. And you know, I mentioned the RWA Summit. We actually met at RWA Summit, connected with Philip and Clemens there, and yeah, I just felt there was a general alignment. Like they do everything with a lot of quality and thought, you know, and you can kind of see from the quality of that video, right? Like everything is quite well made, well produced, quite patient. So you know, we didn't feel like we wanted to rush into something. We felt like we wanted to do something well and good. So yeah, that was the general sentiment around it.
Dom, you're muted, bud.
Oh, dude, thank you. Wow, I was going to keep going. Philip, before we hop into the actual mechanisms of the bid seal auction and how this thing works and kind of do a live demo here, could you actually talk us through a bit more on refi and why you chose them? There were some interesting stats that we mentioned in our chat based on competitors. And maybe, Christian, you actually have a better take on this. We've seen competitors go out and raise at fairly high valuations. And so even if we kind of throw the stone in that general direction, you know, that should assume a pretty nice valuation for you guys. Can you talk us through competitors and maybe how you stack up and maybe some of the raises they've closed?
Yeah, I think we can. I think if you categorize the whole energy market, I think the whole energy market currently is very much focused on the US, and Refi Hub is very much focused on Singapore, which is, I think, an interesting niche because, as Christian mentioned, you have the Singapore US dollar being.
I think, Dom, were you asking about the competitors for other platforms that help you raise capital, or were you talking about competitors in the energy industry?
Yep, sorry, let me clarify. Competitors in the energy industry that have gone out and raised recently.
Okay, got you.
Can you guys hear me well?
Yeah.
Yeah. Okay, nice. So yeah, I think if you look at the competitors out there, you have basically Plural Finance, which they raised last year at an 88 million valuation. And then you have Glow Finance, which raised at a 30 to 40 million valuation. One is being a DPIN that's basically letting token holders navigate as well where to deploy solar. And with Refi, I think they made the good choice of basically dominating, where the money goes and where it's being deployed. Because obviously they are the experts on which solar deployers to choose. And I think, as you already mentioned, there's a lot of risks in solar. So you need to make sure you have the right solar deployers that you work with, and you need to make sure they also have the cash flow and the business running well and mitigate a lot of the risks, especially if you go into other markets in Africa, as Glow did. I think there's a lot of risks on currency risk of these deployments. So by choosing Singapore, I think you have a very solid market. And then if you look at the distribution cycles and the whole setup, I think Singapore, Refi Hub has a strong benefit here.
Okay, cool. That's good information. Like you said, competitors have raised it close to 88 million, and then others at 30 to 40 million. And again, we'd have to go look at those individual cases, but that's interesting stats to kind of have going into this raise. Can you walk me through how this works now? Because I have the site pulled up. We have 5 minutes, so I just kind of want to run through this real quick. If people want to participate and actually go and check this thing out, how does this bid sealed auction work? Because it's the first of its kind, so people need to understand it.
Yeah, sure. Can you scroll up to the top of the page?
Yeah.
I think you need to first verify yourself, so resend the code. But I can also pull up my screen. I can show you pretty easily.
Yeah, go ahead and pull up your screen then. Let's do that. I already did verify the code, so I'm not sure why it's not working, but go ahead and pull up yours.
So can you see my screen?
Yep, we can.
Yeah, basically you start here on crafts.dev/race0. You claim your mock USDC. So I already claimed the mock USDC now. So basically this all runs on DevNet, and you'll be able to simulate as well. If you have a company here between 5 and 8 million, whatever you bid and the clearing price will be 6 million. If you bid below, you'll be refunded, or if you bid above 6 million, you will be included at the clearing price. So you also pay this uniform clearing price. And then we have as well this more detailed docs here that basically let you simulate how it works based on what people are bidding and where the clearing price will settle. So there's a whole simulation going on as well that you can try out. And then if you scroll down, you'll see your mock capital here, and you can see your bids. So I'm the only one that now sees these bids because we basically store on the client side wherever you bid. But when you submit these bids to the network, we store an encrypted bid. And then when the auction ends, so the auction will actually end in 6 days from now. So in 6 days, when the auction ends, the clearing price will be calculated on these encrypted bids. And so we have 3 mock projects here that you can bid on. For example, if I go now to Canara here, it's a biotech company, a biotech mock company, I can say, okay, I want to bid 500. And I submit my bid here. It's being encrypted. And it just opens up Phantom. I confirm it as usual. And then the bid is already committed. And then I'll be seeing the result as soon as it clears.
So you place a bid at a fixed price that you think is fair value, but you cannot see where everyone else is bidding. And if you are, what is it, above the fair value, or how do you get filled on that? I'm
yes.
Still trying to. Okay, if you're above.
So basically,
go ahead.
It looks to match the demand and the supply. So if you do a bid at, let's say, a 7 million FTV, and then the whole demand above 6 million is around 500K, and the company looks to tokenize 10% of their company at the 6 million, they want to raise 600K at a 6 million valuation. So we look where the supply actually matches the demand, and then we clear the auction slightly below that fair price, so that everyone that participates actually has a positive outcome, getting a valuation that's slightly below the fair value. So for example, in this case, the full demand would be like 6.5, 6.2 million FTV, and then it actually clears at 6 million FTV, giving everyone a fair price, and why it's actually benefiting to participating in the auction. And everyone will actually pay the same FTV. So you basically submit, okay, what's the maximum FTV I would be comfortable paying? But if you look at this from this stat here, is I actually bid here on the company FTV, but then you see, for example, if I go to 9 million, the token FTV will only be the 15% stakes, in this case 1.7 million of the token FTV. So in the case of Refi Hub, which will be tokenizing 14%, you will also have a very reasonable token valuation.
Yeah,
Gotcha.
maybe,
Okay.
Philip, it would be valuable for you to clarify what happens if you bid under the clearing price.
Yeah, so if you clarify, for example, if this auction resolves at 7 million company FTV and you bid 6.4, you will actually be not included. You won't get an allocation, and you will be fully refunded. So it serves as well, a little bit as a safe haven where you say, okay, I don't want to bid too much. And I think this is what we have seen with this pro rata sales, right? Where like a team can over raise and claim too much capital as well. But here it's very clear how much capital they raise at which valuation. So by bidding, for example, 6 million, you're comfortable for the team to raise 900K. But if you bid 8 million, you're comfortable for the team to raise whatever 15% of 8 million is, so 1.2 million.
Got you. Okay. Yeah, this is making sense. I think it's really interesting. And this is encrypted by Archeum, right?
Yes, this is encrypted by Archeum. So all the bids are submitted to the Archeum MPC, and they will never be revealed. And then when we calculate the clearing price, we basically calculate the clearing price on these encrypted bids.
Okay, sweet. We have 2 questions. This is our time here, so we got to wrap. But question from Rodney, real quick, that he mentioned earlier. He said, "Do you?" And this is directed at Christian. Do you have any hyperscaler energy assets? I don't even know.
We
what that
currently
means,
don't. We currently don't, but we currently don't.
Okay, not at the moment. Are you guys
Our main
planning to
focus
branch out
is
there?
on maybe in the future, but when it comes to solar energy, there's just so much room to grow within the category before branching out to other things. So that's kind of the reason to keep the focus for until you get into the hundreds of millions of volume.
Love it. Crypto Jones asks, once the bid auction cleared and the raise is over, will all bids be transparent and available for audit on chain? This is a question for you, Philip.
So basically, the bids won't be transparent because we never want to reveal the bid strategy of someone. But what we will do is, like, you will see all the allocations. So basically, you can verify through the allocations. You can see that there's like real bids that actually happened.
Okay, sweet, very good, guys. We got to call it there. But any last minute words from? I'll let Christian have the floor first, and then Philip, you can finish. But any last minute words for anyone looking to invest or interested in refi and getting a piece in this company and what you guys are building?
Yeah, I think Refi Hub is for anyone who's interested in getting exposure to a company that's kind of sitting on the financing layer for the future of energy needs, which is going to be massive, right? AI, electrification, all the power we need is this kind of ongoing and kind of enhancing demand curve. So we're positioning ourselves at the financing level for that. It actually can't be financed quick enough. We're struggling to meet our energy demand. So blockchain unlocks many possibilities in terms of access and speed to be able to make that happen. So you're basically taking a bet on the intersection of blockchain and energy funding with Refi Hub in a nutshell.
Where can we keep up with you guys? Is there somewhere we should follow? Twitter, YouTube, whatever?
Yeah, follow us on Twitter at Refi Hub. And we've also got a Discord, which is linked on our Twitter, but Twitter is kind of the main place where you'll be able to see us and then find our app and our platform as well.
Sweet. Philip, last minute thoughts. You're going into this first bid sealed auction. You're doing something new here. Expectations, excitement. Just let me know how you're feeling.
Yeah, very excited to work with Refi Hub. Go follow them at Refi Hub. And today we are hosting this mock auction. So for anyone that wants to learn more about sealed bid auctions, go to crafts.dev/raise0, try it out. Would love to get more opinions. We also opened up the Telegram publicly, the Crafts Telegram. So everyone interested in ICM and getting to know the Refi Hub team more, please join the Telegram. And yeah, thanks for having us, guys.
Always a pleasure. We would love to have you guys back on. Hopefully after this raise is a smashing success, to just kind of get the post-raise conversation going. So we appreciate you, Christian. It was great to learn about refi, and Philip, as always, a pleasure.
Thanks a lot.
Thank you for having us.
Of course. See you guys. Peace.
Thanks, Tom.
Yep. All right, Josh, I'll get you back up. We are rotating. That was a great segment here. First ever bid sealed auction. Interesting equity component tied to it. On the equity conversation, we have Gabriel Shapiro, some tout as the best lawyer for crypto on crypto Twitter. Very highly regarded lawyer. He's created METALEX, which has created this ACE round, okay? And he's going to explain all about how ACE round works, but essentially it's converting tokens into, safe agreements, which are obviously later at price rounds redeemable for equity, right? So that's how I understand it. We're going to have Gabriel Shapiro come and talk about it. For the first time ever, we're breaking the ACE round. Lots of people are adopting it, Josh.
Is on fire. Pumpcake,
to say the least.
Dexter, a number of these projects are going through it. Remember, Chill and I talked about our thesis earlier this week. If you watch MCG, Alex is also excited to be sponsored by Trojan, which is cool. So trojan.com/@MCG, and you can set up your account there. Scan for 50% off. Yeah, or scan the QR code if you're into that. But
without further ado,
let's bring them up.
The burning question, man. What is ACE? What is the mechanism? Why are people choosing it? Gabriel Shapiro, welcome.
Thank you guys for having me. And yes, very excited to be sponsored by Trojan. Long last. I thought I'd have to become a UFC fighter or something like that get Trojan on my shorts, but turns out you could do it as a lawyer.
Yeah, absolutely.
To clarify, this is Trojan, the trading platform.
Oh, really? Okay.
Yeah.
It almost looks like the same logo though. So
Yeah, it does. It does. But
great. Well, yeah. So ACE is asset conversion to equity, and the basic concept of it is, people run venture rounds all the time. They do seed rounds, pre-seed rounds, and usually they're selling convertibles like a safe or a safe plus a token warrant or convertible note or whatever in these rounds. And usually they take in dollars to purchase those, right? So, and dollars typically come in two ways, right? The company has a dollar denominated valuation in those rounds, and the company takes in dollars for someone to buy the security, the safe. And the concept behind ACE is very simply just to do the same type of round, but to denominate in a token other than a dollar, right? So that means that both the, let's just say the token word BTC, for example, well, that would mean that the token, the company is denominated its valuation in BTC terms rather than in dollars, and that it's also taking in BTC as the purchase price for the security. So, combining those two numbers, you can figure out what percentage of the company you're supposed to own, right? By buying the safe. And so why would you do this? Why would you denominate in terms of a token? Well, a lot of projects have, sometimes they basically, a founder launches a token very early on, sort of with just an idea. Pumpcade recently is a great example of that. Great founder. He had an idea for doing embedded prediction markets within social apps. So, can you just have a prediction market anywhere on some type of streaming service or whatever? He decided to just launch a token in honor of this, see if people would get interested in it. And it turns out it really took off to the point where venture capital investors want to invest in it, and they can raise a significant round from venture capital. But venture capital investors typically want to buy equity in an actual company. They don't just want to buy, a pump fund, meme coin, so to speak. And so when you have this combination of circumstances, it really, you end up with a situation where you, number one, you might not own a lot of the token because pump fund tokens are fair launch. So you might not have bought a huge amount of the supply when you initially launched it. And number two, you want to get, you already have token holders out there. You want to be able to turn them into being equity holders as well, because typically VCs, when they invest, they don't want to only hold an equity. They don't want to only hold a token. They want to hold both. And so if your VCs are in that position, you want to be able to put your early supporters in that same position by letting them convert some of their tokens into equity. So basically, that's what we did we have a platform for doing on-chain venture rounds, and we just tweaked it so that instead of doing USDC, it accepts any coin selected by the founder to denominate their round, and people can buy, for example, safes in the Pumpcade company with Pumpcade tokens, and it's all done through smart contracts on chain.
Okay, could we actually walk this back a little bit, because I want to talk about this ACE round and get into it, but I also want to know what qualifies you, what your background is. Like I mentioned before you came up, people really do hold you in high regards as a lawyer, and a lot of people I've talked to, use you as their lawyer, and you do great work. I want to know who you are first and foremost, and secondly, why this was an issue you wanted to solve, because we see a lot of platforms popping up trying to do this, right? We just had Crafts come on and talk about their bid sealed auction, which is doing, something similar with safe agreements. We know MetaDAO is doing their ownership model. We know Street is doing their ERCS model, right? So there's all these different models, and it's hard. People are trying to figure out what is the best one. And so I kind of want to get to the problem and solution that you're solving. But before that, even, who is Gabriel Shapiro, and why the heck should we trust you to build us the platform that works?
Sure. Yeah. So I've been a corporate and securities lawyer for, something over 16 years at this point. The first 8-ish years of that were in big law, and initially a really big, AmLaw 10 firm called Dewey and LaBeouf, which ended up being the biggest law firm bankruptcy of all time. But that's where I started my career. And then I was at Weil Gotshal for many years, which is an AmLaw 20 firm, and Hogan Lovells, which I believe is also AmLaw 20, for a year or so after that. So, kind of a pedigreed big law history. And what I was doing there, my obsession before crypto was mergers and acquisitions. And I had one of the rare distinction of being starting very specialized from a very early point in my career, of basically doing big ticket buy side tech M&A in Silicon Valley for these firms. So, our clients were Facebook, Applied Materials, Intel, eBay, PayPal, Adobe, a bunch of others, kind of a who's who of Silicon Valley. And really, I was one of the foremost associates in probably the top buy side M&A practice in Silicon Valley at the time. So I really enjoyed doing that, but could have had a great career continuing to do that. But when I read about, actually, when I was doing the Facebook WhatsApp deal, a big part of the thesis for that deal was the idea of WhatsApp is an end-to-end encryption app. And so because I was working on that deal, I got what is this end-to-end encryption stuff? And I started going down that rabbit hole more from a traditional cypherpunk perspective of messaging apps and cryptography and things like that. And little by little, that led me into cryptocurrency. And really, when I read the idea of a smart contract on Ethereum, a light bulb went off, because we did escrows all the time on M&A deals. They're needed for various purposes, and very simply, a smart contract can be thought of as an escrow without an escrow agent. And I thought, oh man, this is incredible. You could do corporate finance with this sort of autonomous technology and eliminate a lot of intermediaries and have a lot of efficiency from it. That became my obsession with this. And I founded METALEX because, somewhat to my surprise, after I'd been doing crypto law stuff for 8 years, still no one had really achieved this on-chain corporate finance type of vision that I initially thought is what Ethereum is perfect for. And so I basically decided to start doing it myself. So, we have these on-chain fundraising apps. They take in tokens, they spit out tokenized securities. It's all non-custodial. It's all still completely legal. In fact, I'd say it's more legal in a sense, because you can really, if you're doing things on chain on an automated basis, you can quality control the enforcement much better than you can with sort of paper and pencil type deals. And that's what I'm about.
Okay. Interestingly, you said Ethereum. Today you're on Solana. Where did that switch happen?
Well, it's not really a switch. Our stack is on EVM, and Base has a really good bridge to Solana. So one of the things we built as part of the ACE round is a way of bridging over tokens from Pump Fund onto Base to do the deal, and then they can bridge back if they want to. The same thing with our thing with MetaDAO. We have a system for reading some state from Solana and then doing some of the legal things that are needed on EVM and the Solana contracts, knowing about that. I would love to have our stack on Solana as well, frankly, just kind of, resource allocation thing. And we initially built on EVM, so it goes, but yeah.
Okay. Interesting. So interesting to see that you were working with MetaDAO actually, but nonetheless, you saw this issue. Like we mentioned before, there's a lot of people trying to iterate and fix this and solve for this. Why did you think no one's done it right? ACE round is the answer and solution, and we're gonna build it.
Yeah, I mean, I'm not a maximalist, I guess. I think the whole ICM space is interesting, and it's going to have a broad array of solutions that are fit for different circumstances. I like, for example, MetaDAO, which doesn't have equity securities at all, it's token only. I think is a very smart solution for a project that wants to go that route, that wants to go the token maxi route, and wants to launch, doesn't already have a token, so that they can launch their token on MetaDAO, from scratch, right? And sort of do it that way. And we have certain legal automation solutions we've provided for that. For projects that already have a token, or that maybe they feel like they need to have traditional investors that aren't going to want to buy something from a token pool. They're going to want those equity rights, and they're going to want it to be more traditionally structured rather than just owning a token that has on-chain protections. Then ACE is a very good fit for them, and I think that will be a fair percentage of projects that want to continue to do dual token equity. So I think dual token equity is something I've been writing about for a long time, as often being a problem, as often leading to conflicts of interest. One way you can solve it is by getting rid of the equity and only having a token, and having the token be really good. Another way you can solve it is by trying to have, instead of only your elite VCs being equity holders, try to have as many of the token holders as possible be equity holders as well. And that's kind of what ACE is trying to accommodate. And the other solution, which is also something METALEX is working on, is to tokenize the equity, to make the equity as much like tokens as possible while still being equity. And I think all of these are legitimate solutions, and different projects are going to want different ones.
Yeah, that's fascinating. You have a lot of people choosing you. Can you talk to me about some of this pipeline? Because we got Pumpcade, we got Blocks, we got Polyfactual. We've seen a lot of the Pump Fund hackathon winners kind of choose this ACE round. We've seen Opal recently talking about potentially doing it, as few as other people we've had on the show. Like, it's very clear that this is a model people are adopting. What does that pipeline look like? How are you choosing people to work with? Or how are they finding you? Just can you kind of walk me through that?
Yeah, the initial, definitely the initial crop, so to speak, were all Pump Fund hackathon winners, and we talked a bit with the Pump Fund guys, worked with them a bit to try to facilitate this, share some of the legal analysis around it as well. So that's been fantastic, and I think that will continue. And then there definitely have been projects approaching us independently, both from the Solana ecosystem and from base Ethereum, that want to do this. And so I think, I don't see any end in sight to it, really. I think it will, I think it will continue. And I think what's really interesting is that now that this exists, there may be some projects, like when Pumpcade launched its token, I assume that they didn't already have this mechanism in mind because we hadn't created it yet, right?
Right.
Maybe they had some vague idea of something similar that could later be done, but it probably wasn't very precise. And now that it exists, you may find that some founders that are more on the legit side of wanting to really build something and bootstrap it, would launch their token, and from day one they might be planning to later do an ACE round, right? And so I think that's very interesting.
Sounds like the mailman must have just shown up or something.
Yeah. Give me 1 second just to deal with my bags.
The guard chihuahua's making sure that
I was hearing the parrot in the background starting to say things too. It's like,
was there a parrot back there too?
It sounded like something parrot was
Ace.
trying to
round.
talk. Yeah, I thought he would maybe like drop a little alpha about the roadmap or the
imagine
projects.
We're tokenizing Opal. Opal's choosing ACE round.
yeah. Oh man.
I think I'm trying to identify the dogs. Oh, here's one of the culprits.
Yeah, so I have like 5 Shih Tzus, and my girlfriend also has a cat, and sometimes there are confrontations that occur. I think that's basically what just happened. But this is Mikasa, named after the heroine in Attack on Titan. Yeah.
There you go. Okay, there's some lore. I'm not a big anime guy, but I'm sure a million people just picked that up and they can relate. 5 dogs. You have a big family there.
Indeed. Yeah, it happens.
It does. Okay. Well, we'll jump back into it. So a lot of these people are choosing the ACE round. Let's break into it, because I think a lot of people are pointing out what they see as flaws in the ACE round and what can be better. When I look at the ACE round from my perspective, and correct me if I'm wrong, I'm like, this works really well for tokens that are gonna ICO. Like, so far, all the tokens that have used the ACE round have been pre-launch tokens, and now they're doing a conversion rate at 1-to-1 or 1-to-2.5 in Pumpcade's case, so on and so forth. I look at this and say, man, I think really pre-ICO, they could sell X amount of their equity via safe agreements. And, that would be a great way to kind of do this. How are you guys looking at this moving forward? Has all the tokens that have come through just been like, they've already had a token and this is kind of the best we can do and we're working everything out? And are you focused on pre-ICO or just like, where's your head at with that?
Yeah, well, we also have a conventional version of the platform that accepts USDC, right? So people can just do a pre-seed round on that basis as well, and that can also be, instead of being for a safe, it could be for a SAFT, or it could be for a safe plus a token warrant. So people could certainly do launch on that basis as well, and then do the ICO later. Personally, I think right now in crypto, conventional venture capital and conventional angeling. Like if you look at a lot of the crypto whales who used to do a lot of angeling. In fact, Chain Yoda has a post about this. He's a guy who's angeled into tons of projects in crypto. And, he was talking about how he has an angel chat and how no one's angeling into anything anymore, right? And so now I'd love for that to change at some point. And I hope it will change back. But right now, it's very challenging to do sort of a traditional friends and family / angel round. And so I think launching, just going ahead and straight up launching a token is a great way for an early stage project, and in many cases probably the only way to try to get a little bit of initial funding and possibly a whole lot of interest and attention, to see if they can make their dream a reality. So we accommodate both paths. But I think right now in the general crypto climate, the launch your token and then figure out equity stuff later path, is going to be pretty attractive to people.
We've been covering this space since Believe kind of cropped up on our radar a year ago. And then there was Bags app, which had some really promising open source and different kind of AI projects come through. Obviously, there's the Pump Fund Hackathon and what Meteor is doing with Bedrock Foundation. There's been this ongoing conversation of like how founders should think about their token and how they should, back in kind of the equity after. What would you say to founders that are out there that maybe have a live token, have been considering this? Like, what's the sell to them to do this?
Yeah, I mean, I think it will just drive more trust, right? It will drive more trust from your community that you're not going to go do an M&A and rug them all. And even if like not a high percentage of the token is converted, just the fact that you were willing to buy more of the token with your equity and give rights to a bunch of the community that likely will continue then be hybrid equity token holders says a lot. And I think it will make the valuation of the token go up or be preserved and, create better vibes and more loyalty from the community.
Can we tap into those vibes and loyalty? I would like to ask the same question, but to token holders that are evaluating and doing DD on tokens that have ACE first non, what's the pitch to them? I'm pretty sure you just laid it out, but would love the clip.
Yeah, the pitch to them is that they're in a position to be the same position as VCs, right? They can be in exactly the same position as A16Z by having equity rights. If there's an M&A, they'll benefit. And then if they'll also get value through the token. I think more broadly speaking, there's the question of, well, some people will just say, oh, you should either have equity or you should either have a token, but not both, right? And that's a very legitimate concern. What I bring, and in some ways, I have agreed with that at times. What I bring to the table, I guess, is a certain sense of legal realism. And we just had the Clarity Act get out of committee yesterday. I was involved in some of the drafting and thinking around that along the way, and a lot of other regulatory developments. It's the idea that the law is going to allow tokens to be just like equity and yet still be tokens that just trade completely freely, liquid and frictionlessly from day one that's a pipe dream. That's not what anyone is thinking, that tokens will function exactly like equity and that will be legal for them to trade like that. So that's just not realistic. I think you can have a token that is better than most tokens. I think MetaDAO kind of goes right up to the line in this regard, of like providing a mix of on-chain protections and some legal protections, but it's not like their tokens have dividend rights, right? It's not like their tokens have actual, and if they did have those rights, then it would be a problem from a regulatory perspective. And conversely, I think, if you tokenize equity, I think what's going to happen over time is there's going to be liberalization of that. We've already seen some releases from the SEC in that regard, so that tokenized equity can be a bit more token-like and a bit more degen-like. And they'll never quite meet in the middle, but they're on a trajectory toward convergence. But because they are different and they're regulated very differently, a lot of projects are still going to want both. So you shouldn't see it as a bad thing, because it's completely legal for a token to accrue real value, as long as it comes from some type of autonomous software. And that value can be very real. Like if you look at the Pumpcade tokenomics, it has a very robust tokenomics that is going to come from its actual system. That the company might have other revenue opportunities, or might have some acquisition opportunity or IPO opportunity. That's obviously going to go through the equity. So really, you're going to want the fact that there's two doesn't mean one is valueless. They both may have slightly different value drivers, and you may indeed want to own both depending on the project.
Yeah, and sorry, Dom, just one last question on this. It seems like forever this has been something we've been looking for like 5 to 10 years at least. The SEC did publish a blog post saying, NFTs and all these kind of network tokens are not securities, and gave clarity there. But on equity specifically, it's like it doesn't seem like it's a technical limitation, doesn't seem like it's a limitation in will. It's just why can't tokens represent equity and just have a clean, it just seems like the laws are there and they don't make sense for a reason, and I don't know what that reason is. But
well, it
creates a lot of frustration. To give my follow on this, creates a lot of frustration for the market, because the market doesn't understand. We want the investor protections, like everything the SEC stands for. We want that as traders. Yeah. However, I just don't understand why it can't happen. Is it because the trading venues are not regulated? It's because there's not KYC on chain. Like, what is the limiting factor?
It has to do with the evolution of capital markets and securities regulation in the U.S. So, basically the core idea of having securities laws is that there should be this very robust disclosure process if you're going to offer a fully liquid security. And if you're not going to offer a fully liquid one, there's options for having less regulation and less disclosure around that, right? So it's kind of like a tiered system. The problem is that over the course of American capital markets evolution, there have been more and more problems. Like, for example, Enron. The Enron fraud was a really big problem with a public company. And every time there's a new problem, the regulations increase. And those are always the regulations on the public companies. So like the regulation that came from the Enron scandal was called Sarbanes-Oxley. Sarbanes-Oxley radically increased the compliance costs of being a fully public company, right? And so what ended up happening is that just to comply with the requirements of having a fully liquid stock becomes more and more expensive, so that only the most blue chip of blue chip companies can ever afford that. And so it just means that very few companies are able to go that fully liquid path. One thing we're exploring at METALEX is, people don't necessarily understand this, it actually is possible to have a significant amount of liquidity prior to the point of going fully public and becoming an SEC registered company. It's just that not many people have done that for various reasons. I think one of the reasons is indeed infrastructure. And I think, tokenizing equity can make some of that more appealing. The things the SEC is doing to give comfort around, okay, if you actually have a DeFi app for securities, you don't have to be registered as a broker dealer for that. They came out with that a few weeks ago. That's huge. So it will become, I think, a little bit more free. It will never be as free as a meme coin, of course. But I think there's more flexibility there than you might realize.
Yeah, because mechanically, like I've set up companies before, you could just say, 10% of my cap table refers to this contract address, and then this is the circulating supply. So theoretically, there is no limitation. It's really, really simple to do. And then on the reporting side, do I submit a PDF into a reporting platform? Like, do I upload my revenues? Anyways, you have to report these things anyways to states
Right.
about your company. I just yeah.
It's not so much the reporting as the auditing.
Yeah.
Right. That's where, it's a quasi monopoly with 4 providers, very, very expensive. And the cost is fixed. It doesn't go down if you're a smaller company. So, literally, I don't think you can become a public company without paying at least a couple million in compliance costs per year. Never mind, probably an even bigger cost for the initial, initial IPO event. So that's really the obstacle and why more companies don't do it. But we have some solutions that we're cooking.
So I want to talk more about the specifics around the ACE round, because there's a few questions, problems, whatever that people bring up. And first, I want to start with compliance, right? We'll take Pumpcade as the example, since most people are familiar with this. Let's say Pumpcade goes and launches this ACE round. It seems like, while this round is opened, they have to be very legally compliant in the sense that they can't solicit investments. They have to watch what they say. I think there's also this misnomer that, non-US investors cannot participate in this. And I've actually heard otherwise, that US investors can participate in this. It feels like there's just a lot of misinformation or misunderstanding of how this actually works.
Sure.
Why can't the Pumpcade team just come out and lay it all on the line and just lay it all out there and just be like, this is how things are. This is what you can do and can't do. Is this just like they have to watch what they say? They're walking a tightrope here.
No, I think they had a pretty open solicitation process. Actually, that's pretty clear. The cost of that is what you mentioned. It's excluding U.S. investors, right? So they just did a broad kind of Regulation S round. They posted on Twitter all the things, but everything, of course, says U.S. investors can't participate. And the way that we validate that within the app is through an integration with ZK Passport. It's actually pretty lightweight. You just go on your phone and you scan your passport. That creates an on-chain proof that you did that. We don't get your passport or anything like that. So you're trusting ZK Passport, but not us. So that's the way that is handled. And
can we touch on that real quick?
Yeah, sure.
If you are an accredited investor in the U.S., or are there certain rules or regulations that allow specific U.S. investors to participate?
Yeah, well, I'll just speak generally. I don't want to speak as to any specific round on the app. So there is the possibility of doing a concurrent Regulation S, Regulation D round within U.S. securities laws, right? So Regulation S means that you did the right things to exclude U.S. persons, so that your offer is not covered by the U.S. securities laws. Then theoretically, you don't have to worry whether the investors are accredited investors or not, or any of these things. Regulation D means that you've offered a private round to U.S. investors. Right. Regulation D can also be non-U.S. investors, but let's just say U.S. investors. And the typical way Regulation D works is you're only supposed to offer it to accredited investors. So theoretically, you actually are supposed to be able to run these 2 types of rounds simultaneously. You just have to make them separate offerings. They're separate documents. They may be solicited differently. They may be negotiated differently. And obviously, they have different criteria for participation. One requires accreditation, one does not. So that is a possibility that exists. For example, if, theoretically, if Pumpcade had a U.S. person already within their network that happened to be an accredited investor that wanted to do an ACE-style investment at the same time as this Regulation S round happened to be happening, they could legally do that. They would want to verify the accredited investor status of that person. Right.
So is there an angle here for U.S. non-accredited investors to participate in these rounds?
Currently, no. Yeah, that's kind of an unfortunate aspect of the securities laws. But so it goes. Yeah.
And so there's nothing at the moment that can be done about this, or how are you guys thinking about it? Are you trying to find workarounds, or it's just
for unaccredited investors, there isn't a great pre-public solution. You can do what's called a Reg CF round, but those are still pretty unsatisfactory in various ways. I would say, you have to do very robust KYC AML. It's quite annoying. And then there's one step up, sort of the step between a private round and going fully public, is what's called a Regulation A+, round, but that does have to be what's called qualified with the SEC. It's not registered with the SEC, and it ends up being quite an expensive endeavor. So we're exploring some of these things, but I would say a Regulation A+ should probably be for like a later project. Not something that's like seed stage or pre-seed.
Got
How
you.
does the Windows work?
The windows how
Windows for conversion. Are they
it's up to.
Do they open at different times? Yeah.
Yeah. So I mean, one of the really nice things about doing this stuff through smart contracts is like you can make a round guaranteed to be open for a certain amount of time, right? So like when I talk to founders about this, I'm like, please keep in mind when you open this, it's like you can't end it. It's going to be open for this amount of time. So please make sure you want that. So that's an interesting element that maybe lets people play a little bit, like see where the chart goes and decide when they want to enter. You could imagine, playing some interesting games here because the valuation is fixed, right? The valuation is fixed, but the token price may be fluctuating during the course of the round. So it's interesting. But to answer your question, it's really set by the founder. And I mean, in theory, they can do whatever they want. I mean, if they want to open it for 5 years, in theory, they could do that. There may be some regulatory issues with holding it open for 5 years. But if someone wants to do it, they could do it. My more likely recommendation, would probably be to do this periodically and, maybe hold the round open for 1 to 3 months at a time, and then look at, give it a little breathing room, see where the project is. Maybe some new token holders come in after that. You want to give them an opportunity, maybe open around again, right? At that point, at whatever the appropriate valuation is then. So that's more how I typically see it going, but it's a permissionless platform.
And does this make these tokens more investable? I mean, when one of the big things with MetaDAO is like 6man Ventures came out and said this is the first kind of ICM quote unquote token that seemed investable because how the structure worked. Do you feel like it solves that problem for venture or credit investors who are like, I want equity deals versus just token deals?
Yeah, for sure. Yeah, because they can have the confidence of getting that additional equity backstop, and it can kind of function like insurance, where if there's an M&A event, they'll at least get something from it. It might not be 100% pro rata to the token, but if you got into that round, then you're protected. And really, my concept of it, I think the best way for it is if the people who are buying the equity, they don't convert 100% of their tokens to the equity. Maybe they do 50-50 or something like that. So they have both. And then that is just going to create a general alignment if that's kind of how the community is situated, where it's like, okay, if your equity holders have actual rights, if you're going to do an M&A and there also happen to be token holders additionally, they will probably assert those rights in a way that might make you uncomfortable with rugging the token in general, right? So I think it just creates more alignment. And I think it can be a very good solution to this problem. And yes, it makes the token more investable.
So just to kind of put the nail in this one, that's kind of been a big question is, okay, well, what happens when this what's it called? Window. What happens when this window closes, right? All of a sudden now the equity's gone and we're just left with tokens. But the reality of it is they can reopen it whenever they want. And it should be assumed, or maybe not, maybe it shouldn't be assumed, but you can imagine that the founder at some point is going to reopen that whenever it seems like there's an arbitrage opportunity or it makes sense.
Yeah, exactly. I think token holders are actually very powerful right up until the point that they're not powerful, right? So when token holders put pressures on teams, when the community wants something and there's a token, that usually actually founders and teams tend to be very responsive to that. So I think if the community is saying, hey, we need another ACE round, I think that's something that's like very likely to happen in a great many cases.
Got you. Another thing I want to touch on, we got like 5 minutes, so we're just going to start riffing through these if you can do that with me. Another thing is we talk about Pumpcade for an example, right? They had venture capital. They went and raised, I forget, was it 6 to 8 million? I forget the exact number, but they went and raised money. And these venture capitals know what price that they were investing at or know what price they got or their peers potentially got. The broader market is more speculating. They don't know what size deal that was or at what price valuation. When the token dips, we can see this in the price action. It seems like it's dipping and someone is stepping in and buying large amounts and then converting through the ACE round to actual safe agreements. Is there maybe a gap right now in terms of like what's information is disseminated to the public, general public, versus what information is disseminated to venture capital? Because, for example, I don't give an example. If the token's at 10 million, 1-to-1 conversion rate, and venture capital got in at 10 million, yet the token dips to 7, no one else knows that they're actually getting a really great deal on this except for the venture capital, right? And so they're probably going in and buying up that arbitrage opportunity and doing the conversion, maybe even getting cheaper rates than they got for their actual round. How do you feel we should move forward with this? Should this be information shared with the public, or like how do you look at this?
Yeah, I mean, that's very interesting. I mean, it is a securities transaction, so there's the general anti-fraud rules apply where you should not sort of like withhold any material information, right? So personally, I would think that maybe that valuation should probably be disclosed as part of the ACE round. I'm not saying it has to be disclosed, but it's not a bad idea. I also, though, would push back a little bit in that I don't think that's a true arbitrage, because venture valuations are paper valuations. You know what I mean? And the reason why they're set what they're set at is often not an investment banking style evaluation that the company is actually objectively worth that. It's often set there, hey, we want to put this amount of money in. We want to leave a healthy amount of headroom for the founder to have equity and to give equity grants in the future. So we put the valuation at this. You know what I mean? And so a lot of times these valuations are very arbitrary. So like personally, I would never really arb against a paper valuation unless, I really thought that paper value, the company was going to like IPO or something very soon, and the real valuation would match the paper one. It'd be kind of a silly way to reason, but maybe someone reasons that way. But if they do, I think they're wrong.
Interesting. The next question is tokens. Okay. Hey, I convert my tokens to ACE round. Now the team gets those, and typically it's this 1-year vest or 1-year cliff, and then it's released. What happens when those tokens get recirculated, right? Because I think the question becomes, well, couldn't they just infinitely loop and take on more tokens and sell those open tokens on the market for equity? And again, it's kind of this infinite loop. Do you have a solution, answer, response?
Yeah, so the way we modified the standard safe to deal with some of these token issues. So, one of the modifications is this 1-year lockup. Another one, which by the way, I would love to see that truly enforced on chain, where like it goes into a smart contract and it literally can't be sold in violation of lockup. We don't currently have that, but I'm interested in that. The safe says that insiders, let's just say you're the founder or something, right? You can't like give yourself a bunch of the tokens that you just took in and just like as like your compensation or something, and then like dump them. Any distribution of the tokens, and this is standard in A16Z, token warrants, all these things. If insiders are getting any of these tokens, it has to be pro rata to equity. So that means the safe holders that put in the tokens, if there's such they'd be getting it pro rata in accordance with their equity thing under the safe. So the only way that the tokens could be used other than that is if it serves a good corporate purpose for the company itself. And that would mean that it ultimately is benefiting the equity holders who bought the safes as well. Like, for example, if the tokens were sold as a corporate asset, the cash that they were sold for now becomes capital of that entity, can either be reinvested in further growth or could conceivably be dividended out, and the safe holders could benefit from that. So that's kind of the way to reason about it. I mean, of course, it's not 100% abuse proof. All securities investing involves some measure of trust.
So they're removed from the circulating supply.
Yes.
Do they get adjusted on the FDV then as well? I mean,
it would depend on the particular, whether CoinGecko wants to do that or whatever. Yeah, I don't know. They also can burn it, by the way. I mean, which could be that if they want to burn it, they can burn it, which I think might be a very good use in some cases. But yeah.
Last question on just kind of the model here is we saw Pumpkin do the 1 to 2.5 round. Recently, we've seen a lot of people choose ACE and go 1-to-1 to equity token conversion. How do you think projects should be looking at this? I think obviously the goal as investors is get this as close to 1-to-1 as possible. But in the future, are you going to push people to try to get to 1-to-1? Like, what's maybe the goal or outlook there?
It really depends on the project. And I mean, I used to, even when I was doing a lot of venture rounds in the company side, during DeFi summer, so to speak, 2020, 2021, these conversations would come up all the time. And it just depends on the project, right? If the likely value of that project is all like let's just say Vitalik had made the Ethereum Foundation Ethereum Labs instead of the Ethereum Foundation, still all the value of what they're doing is really going to come through ETH. So it should probably be 1-to-1, right? Because there's no other value. If there's some type of equity business on top of that, right, then you have to look at which you think is more valuable. Is it the equity business or the token business? Right. And then you would, whichever you would set the ratio accordingly. So it just depends on their model, really. I think. Yeah.
Okay. Thank you. We got to cap it off here, but I do want to get this one last thought out from you. What is the future of METALEX and ACE? I really personally am interested to see an ICO where everything can kind of be conceived. You have a really thought out plan and someone launches with like perceived equity from the start rather than kind of like, okay, I need to give my token equity. Now we're backtracking a little bit, but maybe walk me through how you're looking at ICOs in the future and also the future of METALEX and ACE and what people should be looking forward to.
Yeah, I mean, we want to be the corporate finance layer for all of crypto, basically. So anytime that there is some type of hybrid on-chain and corporate legal solution that's needed, we want to be supplying that, whether it's for MetaDAO, whether it's for pump fund projects, whether it's for pure tokenized equity projects. We want to be doing all of that, and for all of these different entities that are now on chain to be composable with each other for corporate deal making and all these things. So really, we just want to do all of it. Yeah.
Sweet. Gabriel, you're a legend. The people love you.
Legend.
We would love to stay in contact. I mean, we've interviewed over 200 projects this year alone already.
400 in total.
450.
450. It's been crazy.
We would love to, send some your way because I think a lot of them are still kind of struggling to find the solution. Where does my token fit into this picture? So we'd love to further that discussion there. But you're a legend. You got to come on later when we see more of these projects tokenizing. It seems like everyone we talked to recently, or at least a handful of them, are like, yeah, we're heavily considering ACE, or we see the people doing ACE, and it's a really unique mechanism. Myself included, I think this is one of the coolest to come through. So I'm glad we had these this conversation and questions answered.
Thanks for having me. Yeah, let's do some stuff together. We'd love that.
You're a legend. And you got the Trojan sponsorship now. So
yeah, Trojan, Trojan.com dash at MCG.
Not the condoms.
Not the condoms. Yeah.
All right, Gabriel. Peace.
Don't tell my girlfriend. All right.
I won't. Yeah. Well, maybe she'll. Okay, let me not go there.
Chill.
See you, Gabriel. All right. Good conversation. I think there was a lot of clarity to be learned about the ACE round. Really glad we got to break that because everyone's kind of figuring out, know, what it is. And that was the first time Gabriel appeared in person to talk us through some of the mechanisms, his thinking, his thought process.
Yeah,
Again,
it's a big part of like token holder DD is trying to figure out what structures are behind these and then doing the math that we've been doing for the last year on them. But yeah.
Josh, we're gonna jump into Frosworth in a second here. I gotta point this out because I think Ansem is following the show. Ansem retweeted our show yesterday with cards. He also just tweeted about Primus, which Primus is coming on next week. We've had them on before. We saw the CME is doing future sales of compute. Future sales of compute. This is what Primus is doing. Ansem absolutely candled this. It's at 2.4 million. Of course, if you were on MCG, you've known about this since bottom. So I just had to share it. Coming on next week. Tap into
breaking news. Ansem is following MCG for to get ideas for his show. No, I'm kidding.
No, say it how it is, Josh. Say it how it is. No, but truth of the matter is that was a great episode with Ace. We can talk about that a bit after the show. But in the meantime, Frosworth coming back on. We've talked about this mechanism. They were doing something really unique with this arbitrage and their 3 token model, 3 token prawn model. Something again, all very interesting.
First time I've ever seen this.
And they have these tokens that adjust taxes every epoch. And because of the tax adjustment, there's these arbitrage opportunity that bots come in and arbitrage out to make profit, hence turning trading volumes, which equal automatic buybacks for the token, right? So it's a very interesting mechanism. It survived this long, which you typically don't see from a lot of these. So there's a lot of credence to be had there. Nonetheless, the legend, Mblob, you're back on the show. Welcome.
Hello. How are we doing, guys?
We're doing good. We're excited to see how this experiment is going, because I think this is there are two roads to this kind of stuff. It's like, okay, it launches, it does really good for a couple weeks, dies and fails. Or it launches and wow, this is something new, and it goes up for a long period of time. And you've sustained for the last couple months. I'm not even sure how long you guys have been out. So we're excited to get you back on and talk through some updates, what you've been working on. How are you doing? What's new?
Yeah, I'm good. Yeah, so we've been live. We went live the 24th of March, so just under 2 months now, not too long. But yeah, it's been good. Sort of, I think last time I came on, we just hit that crazy spike, like that couple of days where we had all the attention on us. And since then, it's slowed down a lot. But like you said, we've held strong. What we sit about $1.5 million at the moment on profits market cap.
Yeah.
So we came down to about 800. We're coming back up again now, which is good. But I think it just shows that people believe in the idea, or they can see the end vision, they can see the goal.
It's I can hear the audio there.
You can go top left.
You could hear the audio. Okay, I had it muted on my end. It's weird. Sorry,
it's very
boys.
whimsical. I love it though.
Yeah, man. It's interesting, Dom, that you were just saying about how the free tokens. We're actually sort of, I'm chatting to the community at the moment. We're thinking about trying to rebrand it a little bit. One of the issues with onboarding and stuff that I've faced is that the free token system is really quite confusing for people.
Yeah.
Because crime and fraud have this identity themselves, which sort of gets confusing to new people. They're like, oh, which one do I want to hold? Like, do I want profit? Do I want crime? Do I want fraud? Is there a benefit to hold over these outside ones? So we're looking at trying to rebrand them in a way that they lose their identity as such. So it is literally like profit is the token you buy, profit is the one you hold. You never, as a general user, actually interact with crime or fraud directly. And part of that, we're going to rebrand the names as well. So it's almost like you just have two different routes to profit. You can go this way, and this way is cheap to buy, that way is cheap to sell at the moment, and then those ways are going to switch. So we're
I agree.
Yeah,
Sorry to interrupt. And I agree with this move, because I don't think people even need to know that there are two tokens on the back end kind of getting arbitraged out to create trading volumes, right? It's not even like the general public's gonna be doing anything on that end. It's a lot of bots coming in and kind of doing that automated in the back end. So I do think profit being that one token you talk about, and then like the deeper people get, they can realize, okay, there's two tokens in the back end. This is kind of how the mechanism functions. Like I think that's the direction you probably want to lead.
Yeah, that's the feedback we've had from a lot of people. Is that just because when you bring someone new, you just want it to be as simple as possible on the front end. I think that's the key to any successful crypto product, game, anything, is it needs to be as simple at face value as possible. And then you will get people that are more interested in it than face value. You're going to get some people that just want to log in, buy, log off, and come back a day, an hour, or a week later to sell, whatever. So you need to build for those people to start with, and then you need to have everything available for the guys that want to spend a bit more time peeling back the layers underneath it. And I think at the moment, you dive into the swap station and you're immediately like at level 3. Like, okay, there's crime, there's fraud, there's profit, but I can't see a profit chart. I have to go to a different website for that. It's all quite confusing. So we're trying to really bring that down so that when the first time you enter the website, it's just simple. Okay, this is the coin I need to buy. This is what I need to do with it.
And Bob, for our new guests, because we kind of jumped the gun a little bit, we gave a little prerequisite here, but could you give us the elevator pitch, TLDR, what is Fraudsworth? How does the mechanism work? And how have you created something unique and different here?
Okay, so the Fraudsworth is basically an experiment to attempt to create a productive store of value via the profit token. So you have the main ecosystem token, which is profit. And this has a 20 million supply. It's hard capped, and you can stake profit, which in turn allows you to earn rewards from the trading taxes taken, which are paid out in Solana. And then on the outside of profit, you have two tokens, which are currently called crime and fraud. These crime and fraud pools have, these crime and fraud tokens are paired with Solana pools currently. And those pools change their taxes. So one side will always be cheap to buy, like crime is cheap to buy, and the opposite side, fraud, will be cheap to sell at the same time. And these flip roughly every half an hour. So what this does is the cheap to buy token, when you see organic volume, everyone goes through the cheap to buy side because they want the most for their money, right? So that price will go up. And then the cheap to sell token is going to be the one that people sell through because they want to get the most of their money as well. So that price naturally goes down. And then when the taxes flip, you now have a token that's priced high but is cheap to sell, and a token that's priced low but is cheap to buy. So then that's when the arbitrage bots come in. They buy the cheap one, sell the expensive one. They make a bit of profit. It rebalances the pools, and then you also take a load of taxes out of the arb bots as well. So it's a way to, like, you can't create volume out of thin air. Well, you can't at the moment, but you can't in a protocol like this create volume out of thin air. You need people to be buying and selling, but it amplifies that volume by directing them in a certain way that you can then have the bots come in afterwards. It basically takes whatever volume is given organically and then amplifies it.
It's a bit daunting when explained, but the crux of it comes down to, like you said, there's two tokens on the back end. Taxes change, which makes it more valuable to buy one and sell the other, which is going to happen on the back end autonomously with bots, and that creates trading volume. This trading volume then funnels the profit token. Am I getting the gist of it?
Yeah, you've probably explained it better than I could, to be honest. Sometimes I'm so deep into this that the second someone asks me to explain it, I start going off on some long I haven't quite got the elevator pitch down yet, I think. It's it's very hard to condense something like that into a quick. I really struggled with this pitch deck.
It is, and I think that's, I guess, again, the biggest barrier to entry for people is like they just don't understand it. But in the simplest form, there are two tokens which get arbed out and create volume because taxes change periodically, which causes any bot that's trying to make a quick buck or make any money come in and buy and sell, right? And this is just going to happen perpetually forever. And that's kind of the crux of it. And you're right, nailing that elevator pitch is a little tough, but I think once you get it down, it'll click. Let's talk a bit about this traction here.
But wait, just a second, Dom. So last time you were on, Bob, you mentioned that these tokens were not discoverable by Dex Screener and I believe Axiom and whatnot. Have you made progress on making sure those were discoverable?
I have. The main blockers is Jupiter and or Titan, and potentially DFlow as well. But yeah, it's a slow process. It's a very slow process. I'm constantly harassing them. I've got multiple group chats. They have everything that they need on my end. But Jupiter sort of raising the concern that we don't have an external audit at the moment, which is fair. I mean, they also list pump swap tokens. So it's a bit like, are you that worried about everyone getting rugged or not? But Titan just have a big backlog.
Yeah. And they are getting through. And why is it that so I think everyone sees like the pump swap tokens and Meteor tokens, etc., on these platforms, and they, I guess, go through this audit process to make sure that money is not flowing to, you know, people who are going to rug it, I guess. Why is your token? Is your token just because it wasn't launched using one of these protocols that are already audited?
Our liquidity pools via a custom AMM program.
Right.
You needed the AMM program to be custom for two reasons. One is that all of the tokens are token 22s, and they have a custom transfer hook attached to them, which I can explain in a second. But that's one of the reasons we needed a custom AMM. And the other one is because we had to wrap that in the tax program to allow for the taxes to constantly be flipping and changing and to know what they apply to. So because it's a custom AMM, none of the DEXs are aware of our program or have it plugged into their programs. So they don't know we exist, essentially. So they can't recognize us. They don't know how to build a transaction through our pools. So that's what I've had to submit to Titan and Jupiter, is basically just an SDK to say, right, this is how you structure a transaction for our pool. So if someone goes onto Jupiter and they want to buy profit, this is how the transaction needs to be built for them to be able to do it.
And last one on this line of thinking, theoretically, when this is solved, this problem, and profit and the system is not in its kind of little island that it is, what do you think will happen? Do you think overnight, like all of these tokens will show up on trending and whatnot, or like,
I don't think it'll happen that quickly. So like Jupiter or Titan is just sort of like opening the first door on a very long hallway, right?
Okay.
So that is the foot in the door to be able to start integrating to everywhere else. So once that one's done, yes, some of the terminals might integrate us automatically, but there's going to be a lot of others that they then need to be contacted. They need to be spoken to. DeFi Llama is another one. So you need some sort of integration first, but then once that's done, I can then go to DeFi Llama and start working on the integration there. So there's loads of them, and a lot of them will be quicker than this first step. But it's just about it's just a domino effect. You're going to knock that first one is Jupiter or Titan. We knock that one down, and then the rest are going to start falling. And then slowly we can start being integrated fully into the ecosystem itself.
Nice.
Okay, so people should have a pretty decent understanding, at least a base level understanding of how this protocol experiment works to continuously generate fees from trading. Can you now talk us about the end vision? Of course, volume slowed down a little bit. We're aware of this, but there is still that volume from the arbitrage that you guys create on the platform. If you had to kind of give, not a one-liner, but give your vision here and share it to everybody, what is the end vision and goal for Fraudsworth and how this ends up working, I guess, in the future? I just want the grandiose vision here.
So the end vision is the world's first globally accessible, collectively managed wealth fund. And it's done in a very strange way, but it sort of has to be global accessible. But it's like a crossover between that and the super app of crypto that becomes the fantasy football style game of crypto. But instead of managing a fake football team every week, you're managing an actual hedge fund or wealth fund with all of your peers using Futaki. So that is as grandiose as it gets. That's the full vision, and how you get there is in multiple stages.
Can you break that down for me? Is this going to be a wealth fund completely comprised of money created from fees, or is this going to be, can I go and deposit into this wealth fund and have...
So the token profit is basically representative of the fund, and the fund itself is put together via the liquidity pools, because you can't just, if you hold people's money, there's huge amounts of legal work involved, and it also then doesn't become globally accessible. So one of the best ways to do this is everybody's going to put their money in. Okay, where do we keep it in a way that's still globally accessible? Everybody can get to it. You're not custodying it any of it yourself. So you put it into the liquidity pools, right? So you then have to answer the question, okay, well, if it's going into the liquidity pools, how do you split between the assets? And then how do you decide how much liquidity goes to each pool? So this is where the MILF comes in. So without going too much into that right now, what you're doing is you're splitting the pools. So every asset will have a crime pool and a fraud pool. So at the moment, we've just got Solana. In 6 months' time, we might have Solana, USDC, Hype, ZEC, and Meta, for example. And all of those have their own two pools, one with crime, one with fraud. So then what you're doing is you're exposed to the upside of all of these tokens. And anytime any of them increase in value, the liquidity pool is increasing in value, which is in turn increasing the value of crime and fraud, which is in turn increasing the value of profit. So profit is representative of the value of all its liquidity pools, right? Like any other token, that's the market cap. So that's where I'm calling it like a fund. But it's one of the only ways I think you can make it globally accessible due to like investment rules, investment laws, etc.
Well, and I think you've also mentioned in our past conversation, you do want to have like community-based decision markets for different investments, right? Have you guys had any development on this? And just
so the tweet you've got up now. So we've got the first version of what we're calling the MILF, so the Market Intelligence Liquidity Fund. So what this is basically it's V2 of the protocol. You have V1 live now, and there's a bunch of problems with V1 that we're solving for V2. So the main one is this MILF. And what this is we're going to split the crime and fraud Solana pools into crime and fraud pools with Solana and crime and fraud pools with USDC. And then every week you have a vote, which is the one you see up on screen now. So it's a Futaki market where everybody puts their money in and they either choose up or down, which is basically, do you think Sol's going to go up in price this week, or do you think Sol's going to go down in price this week? The result from that pool is then how you allocate the liquidity pools between Solana and USDC for the coming week. So say that pool resolves with $1 million in volume, $700,000 of that went to the upside and $300,000 of that goes to the downside. You then take the liquidity pools and you create the total TVL of all the pools. You would then allocate 70% of that to the crime and fraud Solana pools, and you allocate 30% of that to the crime and fraud USDC pools. Is that making sense so far?
Yeah.
Yeah. So then what you get there is that you can capture the upside of Solana for that week with 70% of your assets. And then the USDC side is sort of just stays the same because it's USDC. But then on the other, so that's when the community is bullish. But then on the other side, and this is one thing that a lot of protocols can't do, is if the community in general is bearish, then they could go 70-30 the other way and allocate 70% of the stuff to the USDC pools.
And this would assume the collective intelligence is smart enough to accurately, at a high level, predict a lot of this stuff. Do you believe that to be true?
Yes, I do. I do when it's financially incentivized, which is like the whole point of Futaki, in what a lot of people are playing around with at this point. Yeah, I don't believe traditional governance would work for this because people will just vote for no reason. Like they'll just do it to take part. But I do believe if you can get the market structure right, you can get a clear enough signal.
So let me summarize this for everyone, because I think it is a little bit hard to understand. How I'm understanding this is you have these pools, and they're currently based in USDC or Solana or whatever. But now what you can do is take this Futaki decision market, and people can actually put skin in the game and say, hey, I think Solana is going to be bullish for the next 2 weeks. Let's put this amount of liquidity, let's actually base it in Solana rather than USDC, so we can see as a whole collective the upside of Solana. And so what happens now is you have this pool swap to a Solana-based pool, and you guys catch the upside of the market. Or if you think Solana is going to go down, it swaps to a USDC-based pool, and this is based on the collective intelligence or people voting via Futaki with skin in the game on the side, the side that the market's likely to go. Is that
exactly that? That's exactly what it is, which in itself is a superpower compared to most protocols, right? Like the ability to be able to start essentially if you switch from a Solana heavy based allocation to a USD heavy based allocation, you're essentially just selling Solana. So like the power at local tops or cycle tops, if people start thinking the tops in, to be able to start selling Solana out of your pools and banking it as USDC is like incredible. If you go over a couple of cycles, the difference, like the pool depth and just the value in general is insane. Like you think about how many coins you see where Solana has a bad day and it goes down like 6-7% because the market dumps or whatever, or goes down 5%. So that sucks already, right? Because most coins on Solana are just paired with Solana. So that sucks already because you're down 5% and nobody's sold. But then also you've probably got the macro coming in. So if that's dumping, then people are going to sell the smaller coins anyway. So you've got like, you get hit twice. But if you can switch over heavier to USDC, you're only getting hit once. And then you also have the opportunity that if you did manage to move over heavier into USDC near a top, then as it starts to bottom out again, if people start getting bullish, you can buy even more Solana back than you started with in the first place, and you can capture even more upside on the next leg up. So that's like the
compounding your gains.
Yeah, exactly. It's not the sort of thing that's going to make a difference over 2 months. Like you're not going to really see the power of it over a 60-day period, but you're going to, it's just compounding is like the 8th wonder of the world or whatever they say, right?
This is I think people took this as more of like a game or a, we don't like to use
what do you call it? Let's just call it how it is. Bob, what do you call it? Is this a Ponzi? Is this an experience? Like, what is the word that you attribute it to?
It's absolutely not Ponzi. I hate the definition of Ponzi in crypto.
Same.
So much. It's just the dumbest definition, right? Because what they're really saying is, if nobody buys or sells, then it's going to die. And you're like, okay, right. Well, if nobody goes and buys iPhones and MacBooks, then Apple dies as well. Like Apple's not fucking Ponzi. Like it's just such a dumb definition. Like a Ponzi, old investors get paid with new investors' money, and when the new investors run out, then the old investors don't get paid anymore. And
fundamentally different.
It's completely different. Like here, if the volume's dry, then your reward weight drops off completely, which is just, there's no false promises. There's no like printing tokens to maintain an APY. There's none of this shit. Like it's not mechanically, it doesn't collapse like any of the classic 2021 Ponzi's.
I think for the sake of conversation here, like we see definitions losing their meaning over time, right?
Yeah.
And I think like we can go down and say, yeah, this is what a Ponzi is. It's when, like you said, new investors come and fund the old investors, and that's a recurring loop until it stops. And now people just kind of adopted this in crypto, and they're calling everything Ponzi's.
Yeah,
It's in fact not what
to
that is.
use, isn't it? It's a bit fun, and there was enough of them at one point, right?
Very left curve.
Anything new just gets correlated or tarred with the same brush.
So what do we call this? DeFi mechanism, like new primitive for
I've
DeFi
got no
mechanisms?
idea, Tom. Like, and there's just nothing that exists like this anywhere else in crypto, right? What we're trying to achieve, there is nothing that exists like it on any chain anywhere. Nobody's
You guys
tried.
got to coin a term, right? We got the ICM
It's
term
the MILF.
coined.
It's the MILF. It's the Market Intelligence Liquidity Fund.
Do you think people? I love the branding. Like the branding's funny, but do you think people see the MILF and they're like, "Oh, it's a meme coin. I'm not going to take this seriously," or then like that attributes to the whole Ponzi definition getting thrown around?
I think the crime and fraud branding is doing more damage to us than the MILF is. The MILF gets really good feedback from basically everybody. Everybody finds it funny. It's just a MILF, right? Mm-hmm. The crime and fraud and the name Fraud's Worth is where I've had the worst feedback on the branding. They love the idea of the Mad Doctor. They like the factory. The website looks great. Like it's a crazy experiment, so the branding suits it. But I think the crime, fraud, and Fraud's Worth is not doing us any favors. Like if I'm honest, I left the metadata on the tokens open for this reason, which is like it's fun when I'm coming up by myself and I'm like, okay, this joke might be good, this one might work, the MILF's funny, but the turning crime and fraud into profit, that angle has sort of fallen flatter than I wanted it to. So that ties back into what I was saying about the rebranding at the start as well, where we're looking to remove the identity of the crime and fraud tokens to make it simpler for people. But it also has the added effect of removing that connotation against the protocol and hopefully allowing us to be taken a bit more seriously. I don't want to be taken too seriously. Like it's an experiment. I think it works. It will work. Nobody's given me any definitive answers as to why it couldn't. So, but it is still an experiment and it's fun. And you're going to need that kind of fun environment to build the sort of community you need to for a long-term asset like this.
Well, you know what's interesting? It is working. And
so far,
I think the best way to prove, so far, I think the best way to prove it's working is that volume has actually dried up, but the mechanism still is functioning as expected, right? That was kind of the crux of the conversation, and so far, so good.
So I'm just going to ping up. I don't like to talk about this too much because the legal side scares me. But even at the moment, we're really not seeing much volume at all. But you're sitting at like 1.5 times, maybe 2 times Sol's APY for staking Sol, and that's
if you have that chart, can you pull it up?
It's if you got the Fraud's Worth FYI site up.
Let me pull it up. But sorry, keep going. I will pull that up in the meantime.
So and that's with very little volume still. So there was times where it ran up, like when the volume was high, it gets to 10, 20, 25 times staking Sol very quickly. And I don't think it would ever sustain up there. I think realistically, all of the simulations I ran when the project, if you've got the other site, which is fraudsworth.fyi, which is like a community run analytics site. Awesome page, by the way. Shout out to him.
Okay, here we go.
And then top right corner analytics, and then yield compare.
There we go.
I try not to use this word again because it scares me, but yeah. So if you go to last 50 epochs on the epoch range, last 50. So that's first 50, and that shows you, was that like 27 times staking Sol? Yeah, so the last 50, we're pretty much at staking Sol. But then if you go to the highest volume 50, which is when we really popped off on that single day, that's then bottom left where it says profit staking. Down. Yeah. So that was, for that 50 epochs, the APY was like 900 times staking Sol.
So can you explain a bit more like what this actually means? Because I think people.
So this is what you're earning in rewards from the taxes when you have your Sol staked. Every half an hour, the protocol takes all of the taxes that were collected in that half an hour epoch and it distributes them. So 71% of them go to people staking profit, 24% goes to the Carnage Fund, and the Treasury takes 5%. So that's where people work out the APR or APY number from.
And the reason we're looking at this is to show that the mechanism's working as planned, even with lower volume then.
Yeah,
Okay.
exactly that. So yeah, even like at the moment, the last 2 days have been very quiet again, but you're still sitting at the same APR as staking SOL, which is not fantastic, but for a protocol that has very, very little volume, it's still working. And that's part of the flexibility that I think is a good argument as to why it's sustainable, is that it's not always going to be paying ripping high APYs, but it does work even when there's very, very little volume.
Yeah, that's the crux of the conversation, I think. Let's talk one more stat I want to cover, and then we can just talk updates or whatever you want to get into. But hold time. This is really interesting. We've seen the trenches. Everyone's seen the chart where it shows the hold time go from all the way up here to all the way down here, and now people are holding for like less than a minute per trade on average. This is a very different reality here. Average current hold time 1.1 months. The median is 1.1 months. Average hold exited is 4.1 days, and OG holders are 93 with 319 diamond hands. Can you walk us through some of these metrics? Why are people holding longer than traditional? I think it's been explained, but go ahead and walk us through.
Yeah, well, I think the number one reason is that they're getting paid to hold, right? Like essentially, like most of these guys have got their profit staked, they're getting dripped out Solana every day. So while that's happening, I mean, there's just not. It's a good way to incentivize people to stay. But on top of that, I think we're starting to build a very strong community. There's a lot of guys in the Telegram that show up every day, just have conversations. Very little FUD in there. Like, it's a nice place to hang around. And I think when you can create something like that, and it's not always price talk and can the dev do something, or why is the price going down? Why isn't the price going up? What's the marketing plan? When you take that away from a community and it's just a nice place to be, people aren't in a rush to move on. And I think that's probably the two reasons, the biggest reasons. And thirdly, I think they understand the vision. I'm very open with what I'm building, where I'm at, where we're going next. And I think that helps people see the vision and understand what's coming next. And in turn, they get interested and believe in it.
Well, let's maybe talk about that vision then, because these numbers are very interesting. I think you made a good point. So what is the vision? What's convincing these people to hold and believe in it, like you just said?
So yeah, so I think having explained or sort of went on an overview earlier of what is the overall vision or the real end goal, which is sort of you have this MILF, this globally accessibly fund, and it sort of looks like a fantasy football style app. But how do we get there, I think, is the main question. So you start with this, which you've got up on the screen at the moment, which is V2, which is the first version of the MILF. So this is when the pools get split into SOL and USDC, and you have this weekly Futaki market that people can put their money in. It gives them a new way to sort of speculate on the price of Solana, which is quite fun. So they can do that. It's pretty easy. You just open your phone up once a week, place your bet, on you go. And that starts the protocol off. Now you have the rebalancing, and then there's some other things we have coming in with this. One of them is that the arbitrage is being brought in-house, which is quite a difficult thing to do for any protocol, but we have some stuff in that's to our advantage that allows it. But what you can then do is, rather than our bots coming in and taking profit outside of the ecosystem, because they come in, they buy whichever one's high, they sell whichever one's low or whatever, they take the profit out of the ecosystem and they disappear with it. Whereas now the protocol itself is the one that's going to be doing the arbitrage. And that means you can start using that money for other things inside the protocol. So one of the things we'll be doing is using some of it each week to seed this decision market. So every week, depending on how much volume or how much volatility you had, you might have 50, 100 Solana in that pool ready to be won by people before anyone's even put any money in, which is a really good way to increase participation. Another way for people inside the protocol to have fun, and a good way to encourage people from outside of the protocol to compete in the decision market too, right? Which is one of the biggest issues you need with decision markets, is that you want as many people involved as possible, because everybody has a different opinion. They have slightly different information available to them. So the more people that can collate that information, the better your signal is going to be. So that's one of the things. And then the other thing you can do is you can just start burning the profit, because the profit will be in crime or fraud tokens half the time. So you just burn it, just keep burning it, send it off to the Carnage Fund to be burnt. And your inflation rate goes up by like 15, 20%. Well, by my simulations, you can't really predict how it actually works on mainnet. But that's, I mean, we've burnt nearly 2% or just over 2% of the total supply so far. And that's with 2 days of extreme volume and then very mediocre volume for the rest of it. So even then, I think we probably would have burnt maybe 2.5% or more with the added in-house arbitrage. So that's two other big benefits that come in V2. And yeah, you have the MILF. So then the next stage after that is to just watch and test for a while, because there's a lot of things that can go wrong. There's nothing that can really damage the protocol, but you need to try and get that market right so that the signal is as good as you want. So for example, some of the things I'm worried about at the moment is like, what if that market just resolves to 50-50 each week? Like no one can make their mind up. And it just resolves to 50-50 each week. No one's deciding they're bullish on Solana. No one's deciding they're bearish on it. So we just keep it at 50-50, which you're not really capturing upside or protecting from downside at that point. You're just staying in the middle. So you need to sort of see how it works in practice to be able to work out, do we need a different style of market? Do we need something that looks more like a meta down market rather than just a betting pool, etc.? So we need to look into that, test that, and then just sort of see if they're right as well. Like you said, it depends on the collective intelligence being right. So you need to watch that and monitor it and just see, or is there limitations you need to put on it? Do you need to put caps? Like, is it damaging for the protocol if people are shifting bullish to bearish by a large margin every week? Because then you're spending more on swap fees, you're losing more in slippage when you're switching between SOL and USDC, etc. So I think that's V2, and that's where it starts to get more exciting, because the protocol genuinely then is something that doesn't really exist anywhere else. Then, go on.
Yeah, no, Bob, I was on the first call. I owned Profit for a little bit. I traded it. And I have to say, I really like this V2 piece here. This is like, one of my good friends who's a very sophisticated person in finance, in the traditional finance world. One thing he fell in love with crypto and DeFi is because he thought it was very creative. And there's this term called creative finance, where it's just kind of like experimental finance. This feels very much like that. And I wanted to ask, because I don't think I got an answer that we want to rebrand, but you have this whimsical feel. You can change the metadata. Like, do you know what that goes to? Like, does it go beyond, or do you kind of keep an anchor point to the Mad Doctor?
I want to keep the Mad Doctor, the whimsical factory, like that. I don't think that changes. So I can't see any reason why we'd have to change that.
So you won't go from this to being like Jane Street or something like that. Trading.
Yeah, no. It's staying as the fantastical finance factory. The Doctor is staying. He might just have to change his name.
Yeah,
but we'll see. I think the core of the factory is, everybody loves it, right? And it fits the protocol. It is, like you say, it's creative finance, it's experimental. It's the sort of thing a crazy doctor would come up with.
Yeah, and I, not to put the crazy doctor or your community into a box, but it kind of feels like it's, a little bit of the gentleman's club, a little bit like hanging out, not the gentleman's club in a bad way, but like it feels like it's kind of a club or like an investment club or investment group. Is that what you would coin your community as? The guys hanging out, throwing some money around, talking about footy and stuff like that.
Yeah, I think you could call it Gentleman's Club.
There you go. Okay. Well, the Gentleman's Club to certain people can also mean different things.
Yeah, I think we can go with that.
All right.
Quite well. I think that's such a crucial part of an experiment like this as well, right? Because not only is it sort of like a long-term experiment, so you need people that are going to come in and stick around, but you also want them to participate in the protocol. You want to be that community where when someone wakes up in the morning, they're like, oh, what's the first place I want to check in at? And it's not because, I just want to check in because I want to know what the price is doing. It's because I want to check in because there's something going on, or there's a little community event, or there's a good conversation being had, or I've made some friends in this space and I want to go and speak to them. Like, that's the sort of environment you have to curate, I think. And so far, I think we're doing that very well.
And crypto used to be like that. I would say, I was an OG CryptoPunk guy, and it's like the early NFT communities were very much like that. The Chainlink, the Chainlink Mafia used to be a thing. The XRP Army is still a thing, but like, I don't know, this generation of traders since Pump Fun have just been so degenerate, don't care about each other, and just like, you're taking from one other person, first like kind of winning together. But
yeah, and I think part of that is just because it's very, very difficult to win together with meme coins, right?
yeah,
Like, even when they
run 0 sum game.
Yeah, it really is. Like, even when they run up to hundreds of millions, there's not enough for even 100 for the people at the top to take their money before everyone else gets fucked. And I think that's part of the reason, is because the way they're designed has caused everybody to start fighting each other. And so naturally from there, you then proceed to, well, what's the point of making a community if we're all going to have to fall out in 2 weeks or 2 months? And I think this has potential to sort of bring that back, right? Because you can still all win together with a project like this.
Yeah, maybe sorry, go finish your thoughts. Sorry, and then
so like one of the things I've really focused on was trying to make the liquidity as thick as possible, because it's just such an underrepresented issue that, we had a run up, we went to 100 mil, woohoo, yeah, but one person got to sell, man, and then you were back at like 70, and then someone else sold and you were back at 20. Whereas with this, like, we have it's like a 1-to-3 ratio on liquidity to market cap or TVL to market cap, which is basically unheard of. Like, when we had that big run up to 8-9 mil or whatever, there were people slamming like 700-800 SOL out of the chart, and it was moving it by a couple of 100K. Like, that's the sort of thing you need to be allowed to allow people to stay and to allow people to win together.
And is that because your math parameters are better than the AMMs on like Pump Swap?
It's because Pump Fund sells a ridiculous amount of supply for no Solana. It's just, the pool starts so thin that you need years of compounding from Pump Fund to be. So Pump Fund sell, like, what is it, 80% of the supply for 80 Solana? Is it about that? 70%?
Yeah, the first part of the bonding curve is what you're referring to.
Yeah, so then you get what? So you get 20% of the supply put into a pool with 80 Solana, and there's 80% of the supply floating around. 99% of the time, that's only going to end one way, and it's not up. So we raised 1,000 Solana on the bonding curve. So that was 500 to Crime, 500 to Fraud, and we did that with, I want to say we sold 46% of each token for that much. So then that meant that the pools got seeded with 500 SOL each and 29% of the supply, which is still, it could have been deeper, but you have to make some trade-offs, especially when you're cold launching.
Yeah.
But then we also have a 1% AMM fee compared to like the standard for Pump Swap or Radium or something. It's like 0.25%. So although people have to pay it, that's part of the game, right? So you need, and especially with a protocol like this or some kind of game like this, you need something that the project itself owns, because the liquidity pools are obviously sort of owned by everybody. Your money goes in, you can take your money out whenever you want to by buying and selling. But you need something that the protocol owns, and everybody that comes in or leaves the game has to leave a little piece for the project so that it doesn't die. The floor grows and grows. So that's ours. Ours is the 1% AMM fee. And I think, so we've taken nearly 600 Solana via that fee so far, and all of that just stays in the pools. I think that helps, and especially the more as we start to get more stability and see more volume, especially when you're going sideways, that can compound really quickly, and it really helps prep you for the next leg up. So I think that's one of the things that helps on the PvE side.
Yeah, and then what do you think is the spark for that next leg? Is it this V2 getting launched? Like, I think people see these launches and they're like, all right, V2 came out, but then nothing happened for like a month. And then you're kind of in the same, chasing the same volume. Is it getting listed on Jupiter, and then all these routes are now available? Like, what do you think that catalyst will be?
I think the biggest one is probably the V2 as opposed to Jupiter. Like, Jupiter and stuff is nice, but I don't think it unlocks as much as some people think it will. Like, it's obviously great to be integrated in the Solana ecosystem, but I don't think it's a catalyst. I think V2 is, specifically for two reasons. One of them is that our decision market is open to everybody, and it's a question that everybody has an opinion on, right? Which is something really hard to do in a decision market. Like MetaDAO markets don't see that much volume purely because you have to hold the token and be bullish on it long term, really, to want to take part. Whereas our question is, do you think Sol's going up or down this week? Which nearly everybody has an opinion on in CT, and probably out of it when you add more assets. So that's one thing, is I think we'll see some good participation in that. And then we take a fee on that. That fee goes back to buying and burning and more carnage. So even without people buying and selling, if you can get participation in the market, you're going to start seeing volume because you're still buying and burning the token. The second thing that I'm really excited about, and I don't think many people have sort of clocked onto yet, is that, like I said earlier with the arbitrage, you can't create volume out of thin air. It needs to be, you need some sort of price changing somewhere. And currently that price change has to be through organic volume, because people have to buy, people have to sell to create the spreads. When you have pools where the quote side asset is more than one asset, so currently we've only got SOL as a quote side asset. The second we have USDC as well, you now have arbitrage potential between SOL and USDC. Yeah. So nobody can buy and sell the token. And if SOL moves one way or the other, people are still arbing the pools, and well, the protocol is still arbing its pools and it's still paying taxes. So you now have external applications to create volume inside the protocol, which is something we don't have now, and I think will be quite a big deal. And then when you get to V3, that gets even crazier, because you can have quotes, so you can have like SOL, USDC, Hype, ZEC, Meta, RAD Bitcoin, you can have some X stocks, you can have like 50 different pools, so you're exposed to the upside on all of them if you want to be, or you move it all back to USDC if you think we're getting bearish. But in the meantime, anytime one of these quote side assets changes in price, those arbitrage bots are just firing between them constantly.
Yeah. Wow,
And
Bob. This is one of the this is a really interesting platform. I don't know what we call this, protocol, platform, etc. It started with a, click the red button, but now it seems like it's really broadening out. But yeah, Bob, thank you so much for,
no worries. Thanks for having me on again, guys.
Love the updates. One of those ones that we'll be monitoring and just like you know, seeing how this performs over time, because like Josh said, it's new technology, something we haven't seen done before, and everyone wants to kind of see how it turns out.
It feels so fresh and new. And when is V2 launching? Do you have a firm date on that?
Just the market itself is done and the rebalancing contracts are done. I am probably going to pass off the code to a professional dev team, because I don't know if we've covered this, but I can't actually code. I couldn't write a line of code myself if I tried. But I would like, there's a few more risks associated with this version than the current V1, to the point where I'm uncomfortable just being AI auditing it a bunch of times. I want it looked over professionally.
And hopefully that'll help with getting listing on the reps.
Yes, that's getting passed on probably in the next week or two. Just waiting for the quote back, and then once it comes back from them, we can go from there.
Cool, Bob. That's awesome.
Great to speak to you guys.
My guy.
Good to chat as always. Thanks, Bob.
All right. Good streams today. Covered a lot of new, literally every single conversation today was on a new primitive, something we haven't really seen done before from both the crafts bid sealed auction with refi. Good to understand what refi is doing with energy, to the ace round with Gabriel Shapiro, who again, probably the most prominent crypto lawyer out there. We could see his background was very phenomenal. And then of course
he worked on the freaking WhatsApp deal, dude.
WhatsApp M&A, dude.
$20 billion deal.
Crazy. So best in class. And then we have of course just now Bob from Fraudsworth talking about their new primitive, which is not a Ponzi. You should not call it that. You should just call it the MILF, according to him. So good conversation today. We got to jump into a few charts. There's two I want to talk about. We'll keep it quick on your Friday, let you guys go and relax a little bit. I know I'm ready to. So I'm sure you guys are too. But let me get this off the screen and let me pop this off. Josh, I can remember, it feels like almost yesterday we were talking about Litcoin.
Oh my.
Was it yesterday we had, I think there was a spiel that we went on here that said, hey, Fitcoin, wow, Litcoin, May 14th, man, I think you're going to look back on this and it'll be a pretty good buy, whether you buy it here, whether you buy it in this box, it'll probably age pretty well. Well, markets are shit, and this is up 75% on the day.
Bro.
So we'll have to get that clip out. But I explicitly, either yesterday or the day before, explicitly remember coming on here and saying,
No, both days. I think you've said it a few times this week.
yeah, wow.
Well,
Well, that's
do you have
looking good.
do you have a position here?
No position, no position. So unfortunately, I go and I go and say it on live, and then I don't actually position. Again, I was kind of waiting for this box, just thinking market conditions would send us lower. We're still like, I'm to kind of preface this, I'm still in the stage here of the markets where I'm not completely convinced everything's going to start moving up. So I'm still only bidding at support levels, right? And so how I'm looking at charts, and we'll take Litecoin as an example here, which aged poorly in this case, but poorly for me in this case. But how I'm looking at charts is I am really only buying at extreme support where I know my downside is relatively limited. Of course, it's never limited to the fullest extent, but relatively limited to below the prior swing lows, right? And so that's why I'm buying in these zones. And of course, this is where demand stepped in the past. So there's reason for me to want to buy here. And so that's how I'm trading right now. In a market where everything's running and rip roaring and going straight up, you don't look for those kind of dips. You look for much more shallow dips. In this case, the dip was more shallow, but I think we're still in the market where you need to be cautious and cover your ass before you actually look long, right? Preserve capital first and foremost. And so that's why a lot of my entries you see are at these base levels. And if I can't get them, I'm not going to stress about it. There's a lot of really good projects. But Litecoin specifically, we mentioned we've done 200 streams this year. We've done 400 streams plus, more like 450 in total. And out of all these people, there's few and far in between who I actually like. I'm like, wow, this guy's smart. He's doing something interesting. Litecoin was one of those. I explicitly said that. Litecoin was one of those. Cards was another one of those. Cled was another one of those. And again, kind of going back to this conversation we saw on Thread Guide the other day, a traditional dude that ran up $20,000 to 80 million based on his trading strategy of attention trading. And he goes, look, people will tell you to exercise risk management, and I'll still always do proper risk management, practice proper risk management. But he said, look, when I have high conviction on a trade, I'm going to put good size into it. 1/4 of my portfolio, I think, is what he's saying, even 1/3, right? I wouldn't recommend that. But he was saying, out of the 80 times I've done that, there's probably only been 10 times I've been wrong. And of course, this comes with deep understanding and knowledge of the market. If you're just new to crypto and you're just getting into it, don't make these big bets because you haven't seen it all. You need the broad picture. But as someone who's interviewed 450 plus people, been in crypto for a long time, I think I'm at the position where when I get these big bets, I'm going to start leaning into them heavily with 1/5, 1/6 of my portfolio or more size. Probably not the wisest thing to do. Not in this market either. I want to clarify that. But I think that was a really great takeaway. And nonetheless, out of the 450 interviews we've done, handful of stuck out. Litecoin was one of those because the founder was so good, because the mechanism was unique. And it goes back to what we were talking about. In a bull market, in a crypto-specific bull market, what runs is crypto-specific technology. And this is something that can only be done through crypto and the decentralized nature of the data that it mines and is paid for. So again, it kind of fits in that box. Don't need to harp on it too much longer. It's up. Like you've missed the opportunity, at least in the short term. I would say next time, same strategy, right? This gold box will move up. Technically, this is the leg that sent us, right? But I would say this is where demand came in. Clearly, we saw 1 dip here, buyer stepped in, 2 dip here, buyer stepped in, even in a bad market. I think you can deduce at this point, there is demand here. So I'll copy this box and I'll move it up to here. I would say, and I'll even break it down, even if you get down to this little Doge candle, they call it here at the 660 range, that's probably a bid level. So it's a pretty wide box. So I would even maybe I'll shorten it up to like something like this. But this is probably where I'll be looking for the next entry of Litecoin. Again, sideline, not happy about it, still can see the value in it. And again, if fundamentals have changed, I can even check their Twitter. It might be more valuable here than it was even before.
April 30th, if you want to mark it off, was when Taka was on.
April 30th?
April 30th is like 400K or 450 or something, 500K.
Literally right here, huh?
Yeah, right at that bottom.
Okay, beautiful. And we'll start marking these out for you guys so you can have an idea of when we interview people. So looking good on that. Let me go quickly, just do a quick look at the Litecoin. And I think the name is doing it a disservice because I looked at this originally and was like, meme coin, don't care. But it's more than that, clearly. Let's see. There's been some updates I saw, and I do, again, add this to the list at the very least. If you want to get to know what a project does, add them to a list, watch them for 2-3 weeks, and you'll have a good idea. Litecoin has no official blah, blah, blah. Okay, 6 hours ago, this was posted. Just going by purely numbers, the Litecoin. And remember, they were looking at deals with AI labs, right? This was not like, hey, we're in the experimental stage. This is like, oh no, we're talking to AI labs and like looking to sell this data that's being produced here. Just going purely by numbers, the Litecoin protocol right now, sorry, I keep interrupting myself with new thoughts. Also remember that this has a similar mechanism to Fraudworth in the sense that bots are going to do whatever makes them money, right? They want to pay for this compute. And so what they're going to do is they're going to go and mine this data, right? And as long as it's valuable, they're going to do it. And so they have a treasury system in place to where it remains valuable for these bots. And if a ton of bots come in and do it, well, then it's, going to be less valuable for other bots to do it. They're going to drop off until it becomes more valuable again. So this is how the protocol works. Self-reinforcing should ideally last indefinitely. Again, this is kind of the value of AI here and agents that can go and do stuff autonomously. If it's profitable, they will arbitrage it. They will do it. And that's kind of the conversation here.
And what the bots were doing, for people to understand, we're coming up with unique solutions to problems as unique data points. It's almost like proof of solution was their mining algorithm.
Yeah. Look at these numbers, though. This was released 6 hours ago. Just going by purely numbers, the Litecoin protocol right now also has 7.61 billion tokens staked, or 73,000, which is around 74.1% of the token supply locked for at least 90 days. They only have 10 billion tokens in circulation rather than 100 billion. That's crazy. I would assume it's more like 7.4, but I don't see how the math works on this. But nonetheless, this is just what I'm seeing here. 7.61 billion tokens staked. That's $73,000 in USD, higher now, which is around 74.1% of token supply locked for at least 90 days. Bullish supply and demand. Research Treasury is at a 2.19 billion token, or $21,000. Okay, so nice. So again, this is the treasury I was talking about. Bots are paid to come up with these solutions, and they have $21,000 of treasury to incentivize this. Again, it's kind of got this diminishing cycle, so they continue to come back and be incentivized to do this. Again, as long as it's profitable, even by the smallest margins, they should keep coming back in theory. Total earned by miners since inception is 2.89 billion, or 28,300. So wow, there's been $28,300 of economic value added from bots actually solving solutions for this, right? They solve solutions, they get paid from the treasury. $28,000 has come to this. And again, the treasury, then from the solutions that they solve, these are sold or they're put up in bounties, and so they pay for themselves, right? That's the idea. So $28,000 goes into solving a problem. Well, an AI lab might give you $50,000 to go and do that, or $100,000 to go and do that. And so again, the treasury becomes profitable, treasury grows, incentives grow, ecosystem grows. We understand, right? These are all verifiable numbers. There's an appetite for AI exposure, and crypto is providing that onwards and upwards. Yeah, I think that's great. Again, proving itself out. And then Tech Adon also put out a more deep dive 6 hours ago. So I'm just gonna riff through some of these stats as of May 15th. There's 8,428,236,000 verified AI submissions. 8,400,000 verified AI submissions on the platform. 14,776,000 lifetime submissions. Okay, human and AI verified. 10,992 unique researchers. Yes, this means unique wallets. There are 10,000 people, about 11,000 AI agents, people, whatever, wallets contributing to this platform. That's pretty impressive. Over 100 billion for something that's trading on $1 million market cap, mind you. Over 100 billion AI tokens of compute consumed by AI agents on the single protocol. And again, that's the thesis. It costs money for this compute. Can they make profit by using it? There's been over 100 billion AI tokens of compute consumed. Wow. 2,887,418,000 Litecoin distributed. 2,800,000. That's 2.8%. If there's 100 billion in circulation, if there's 10 billion, that's 28% distributed. Really good for the amount of time this has been alive. This is what 3 months of quiet building looks like. That's 3 months. We know what this is. We've talked about how it works. We've had them on the show. We got to get them back on, I think. Yep. So we talked about these numbers. Yeah. So you guys can go and read through this on your own. But here, let's read the thesis, and then I'm going to kind of wrap on that. The thesis here for Litecoin: AI fundamentally needs crypto as its coordination layer. permissionless payments, verifiable computation, portable identity, trustless collaboration. Crypto is not a vertical. It is the substrate AI agents will live inside. I think we know this to be true. We've had it. The thesis is very simple. AI will choose the most economically efficient route every single time. Crypto stablecoins are that route, bar none, bar none. And then the chain, I guess, becomes also another factor. What chain will this happen on, right? If the settlement is much cheaper, I think agents will be willing to sacrifice instant finality or some settlement time to go to the cheapest chain, right? So this is all this arbitrage is going to be worked out by AI. The verifier is the new source resource. We have begun shipping it. 3 months in, 4 phases of research output coming, 1 protocol that already does what nobody else has, trading at a market cap that does not yet reflect any of it. Wow, that's bold for the founder and team to say. I would happen to agree. The next year is going to be loud. Yeah. Litecoin looking really good. Again, off a pump here from some of these numbers. We talked about this. We were banging the table on it. And I think the thesis is pretty sound. So any words, Josh?
Nope. I like it. It's a good move.
Good little clip too. I think maybe we'll get out 239.
Good little clip.
Nonetheless, let's talk about Primus as well.
Yeah.
And there you go. Whoever just bought in off that little thesis piece with 5 bands, congratulations. Good luck. Nonetheless, let's talk about Primus, which apparently Ansem retweeted. Do you want to give a TLDR on where we're at with Primus on just like what it does, the problem solving?
Yeah, really quick. I mean, the CME group came out getting compute futures listed as a contract for derivative traders. And I think if you can pull Primus chart up real quick. So that's like the kind of probably catalyst that happened yesterday or the day before. And Primus was working on this. And as you know, with hyperscalers and compute, you have a bunch of input costs. You have energy from the utility, you have the physical infrastructure, chips, all sorts of like actual human costs then roll up to what you charge a hyperscaler for that actual compute to train a model and whatnot. And that's what the NYSE the CME group is trying to offer that as a thing. And why would you do that? Again, really quick, derivatives are useful if you're a farmer and you have corn. You may want to guarantee a price that you sell your crop at the end of the year, regardless of what your yield is. And if you're Kellogg's, you want to have a guaranteed price at the end of the year, again, regardless of what the crop yield is or the market prices, to determine your input costs in Q4, which you model to your shareholders. So there's a reason for commodity derivatives to exist. Now there's a reason for compute derivatives to exist for a lot of those same things. That was Primus's major thesis here, was to guarantee a price for that actual compute. So that's the overarching thesis. Did Ansem say anything on this?
This is the question. I saw my chats blowing up. Ansem just, tweeted about this or retweeted this. Yeah, look at his profile. I don't know why it's dipping so much. Maybe retweeted, unretweeted, but again, sent this from 500K, which is crazy that Ansem is retweeting this, to 3.5 million. Not crazy because it's not a good project. Crazy that because Ansem's got a lot of pool and could be seen as manipulation. But let me go to his profile and just see what we can find.
Primus is on Bags, yes. Also, I think they won part of the Bags hackathon too.
Yes, they did. So Primus won part of the Bags hackathon. They are on Bags, and the CME thing is kind of like the big catalyst, plus Ansem, of course. Let's just take a look at Ansem's profile. Because I took a quick look. I didn't see anything. Was it in a reply? Like, where is the Ansem shill here? Here, maybe I'll just do this. I'll do this. Search Primus. Nothing. Okay, so he must have retweeted. Okay, let's check replies real quick. Because everyone's saying this, Ansem shill, and then the chart looks like it happened 2 hours ago. Would have been around this time.
I'll try and look too, but
yeah, try to find it yourself. I'm gonna go on his main real quick. Primus, here we go. Oh, he retweeted, right? So Chili posted this. My favorite app being built on. Oh, okay. So this was under his Solana tweet. What's the favorite app on Solana? Chili says my favorite app being built on Solana is Primus Protocol. Shout out, by the way, shout out Chili for bag working. This is how you do it, boys. The future of AI won't be won by who has the most GPUs, but who can price compute intelligently. Premise is building exactly that, the unified pricing layer that turns fragmented volatility GPU supply into normalized reservable rates. One protocol, predictable costs, real adoption. Premise is the infrastructure bet for the AI era. Great thesis. Great thesis.
That's a great thesis structure. Like all the structure should be like that.
Yeah, this is how you bag work, boys. Take notes. Chili, shout out Chili. Let me see what he's talking about. Potentially worth a follow. I give out follows very lightly. You have to have like a pretty hot streak.
Search
Yep,
Premise on this guy's profile. See when he first started talking about Premise.
All right, let's see. And it doesn't really matter because even if he's just recently
You're
started talking about
PRIMIS. Yeah.
All right. Let's see. Premise mode an hour ago. 32. Not recently. It looks like he has been kind of silent about Premise, I think, on his profile. But nonetheless, he seems to be a holder because he was bag working. Nonetheless, good for him. Here's after this happened, Chabua put out an update, who, by the way, has been on MCG, which I just reposted. Cuba. Oh, yeah.
Did you say Chabua?
Nope, I said Cuba. I didn't say that. Okay. Dude, now you're making things up. And guys, why is Josh making things up again?
Hey, the stream don't lie. So
no, Josh is making it up. Be cool to have Chili on stream. Is he a Chad, a Quant? We'll have him on stream. We'll have him on for Friday, dude. Definitely. I guess I'll go reach out. But nonetheless, we have the Premise team coming on later next week, I believe. Josh, do we know what day that is?
I don't know. I'll have to double check.
Confident they're coming on though. Okay. So nonetheless, he puts out this tweet right after Ansem retweets, just kind of giving an update, letting people know where they're at. So here's a Premise beta update. Yesterday, we showed the first part of the flow, query rates, reserve rates. Now we're showing you what comes next. Your workload runs as usual. Usage is emitted and Premise reconciles it against the reserve rate, and the rate matches. This is our core product architecture. Again, we talk about, there's very few things far in between that we like on the show. Premise was one of the ones that stood out. Not just saying this because stuff pumps. This is like, you go back and fact check us. I feel like we've said this. This is our core product architecture. Query the rate, reserve the rate, attach workloads, reconcile usage. Also, mind you, Premise gets them at discounts to spot compute, I think is what I was hearing, right? So you can get these future contracts at discount to spot compute, right? Because they have a way to do it for cheaper. I forget the exact mechanism. The goal is not to change how billers deploy. The goal is to make compute pricing predictable before the workload runs and verifiable after it does. We currently have 8 teams /billers trying our closed beta and helping us improve it. We estimate a total of 100,000 compute volume is running through Premise right now. We help these teams save on average around 23.5% of their monthly compute bill and gain tens of hours of productivity. This is what matters. Okay. So yes, you have futures pricing, but also I think, again, you're getting it cheaper than spot. And it's hard. It's funny. I say spot for an illiquid market, but what would typically be your going rate for compute? We're building the pricing layer for compute. Our open beta is releasing soon. Premise mode. Again, won the hackathon. This is a little demo of it, I guess. You guys have heard the Premise thesis here. It's dipping pretty quickly. Like this could be a bid. 1.2 mil right now. Premise is dipping. Ansem's retweeted it. It's gotten some good attention. CME's talking about this, the importance of it. They said they've got 100K in volume running through the platform. 1.1 million right now. Just like I did yesterday for Litecoin. I think now that the momentum started to pick up, people are going to eat this up pretty quick. Of course, yes, would like it dipping back into this range where it was sitting forever. But if you didn't get that opportunity, anything I think below this point now that the ball's rolling could be interesting. And at the very least, DCA, right? Throw half your bid size in, a quarter of your bid size in here, and then use Meteora to DLMM Sol or USDC. I would say USDC because I think Sol's going to go up as we kind of move down, right? So that would be the trade here. If you like Premise, which I think is pretty compelling. So yeah, bookmark it here, May 15th, about 2 p.m., 1.1 million Premise. I think this point below is probably a solid DCA. Josh, you want me to pull this up?
Yeah, I'm just trying to, just one last thing on this Premise situation. So Chill and I had done a lot of DD on this, and just You know, there's like certain people that you follow projects or that are in it and talking about it, and you just think, okay, a little bit of a yellow flag there. We'll slow it down. And so that might have been in play here. Someone's got to take profits, right? I don't know who's taking profits, but that's a pretty solid retrace from 3 mil,
Yeah.
3.5 mil back to 1. Like, you get the Ansem catalyst and then you're just kind of selling into it. Maybe, I don't know. So
yeah, you do sell into these
it could have,
catalysts, but
yeah, it could have been bundled a little bit and just a little bit's undone. I don't want to speculate because Primus has been pretty on our show, pretty transparent, but yeah, just
yeah, I will say, look, go into there's 22 people that hold over 1%, and a large majority of those people hold over 1.5%. Maybe not a large majority, but a lot of the 11 plus people hold 1.5%. So some people even like 1, 2, 3 holding closer to 3%. 1, 2, 3, 4 all holding closer to 3%. Likely that these are the same wallets right here, 2.88 and 2.88, which has been broken up.
Is there bubble maps? Can you throw bubble maps?
Yeah, lots of 1.5 percenters as well. So yeah, I would say there is some supply overhang, which you need to watch out for. But again, question becomes, even if all of those top holders kind of dump, is the value enough to be absorbed here to where like 1.1 million is still like a fair or undervalued price? Again, sleeping markets. We talked about this catalyst literally the other day and exactly why Primus fits into it. And then today we're kind of seeing the fruits of that. Yeah, so here's bubble maps. Yeah, 3%. This person holds like 8% of supply. Yep, number 4 wallet with 3%, number 5 wallet with 3%, and then 2% wallet. So that's a pretty nice bundle along with some smaller wallets here that are connected in some capacity. They bought in for 22K. They're out for about 11K. I wonder if we can see the times on this 4 days ago. Oof.
Oh,
Ew, buddy. Sorry. Sorry
well,
about that.
there's a redistribution.
Yeah, but they hold 8%.
RIP.
That's an
Yeah.
8% cluster. Over here, they got, a 4% cluster. Over here is probably going to be another 3%, another 2.5%. So there are some clusters to watch out for. And
Yeah.
let's
I mean,
see if these
we
guys.
were cautious when Primus was like 400K, and then it went up to it's a mil now, and it's done fairly well in all respects. But yeah, just again, there's certain things we've been cautious previously based on who was involved, and we wanted to continue that.
Let's look at these clusters though. This cluster bought 4 months ago has not sold.
Yeah.
Now maybe they transferred out and sold, but that should be tracked on here. This cluster bought over a year ago, it seems like, or it's been a long time.
And maybe it's a team member, whatever. Like, again, don't want to FUD the situation, but just
take
there
note,
are clusters.
of course.
Yeah.
This cluster bought in from one address 4 months ago, still holding. I will say these are like pretty solid holding clusters. This one bought in 2 days ago. Okay, so this was a great buy, 6.47K 2 days ago.
Goodness.
Great buy there. What about him? 4 days ago. Yeah, can't tell if these are buys or sells. This person 5 days ago, I think was their sell potentially. Yeah. So, okay. Yeah, so these guys maybe not so much, but interesting nonetheless. Little analysis there. You're right. This is a scary chart. It does look like lots of unwind of supply here, which naturally happens if you've been holding Primus through, all of this to finally get, if you bought in up here at the top and you've been holding all the way through this, that's 90 days, you're ready to unload. But this wick is really not what you want to see. It looks very bad. But again, I like the Primus thesis and I like the numbers that they've been sharing, but I agree with you, Josh. Some cautionary tale. Founders dumped yesterday 30%. So kind of back at that entry we talked about. So if we really like that thesis, here it is. Again, goes back to what I said with Lewis. I don't think he was able to raise VC. And I think it's just if they had the Stanford dropout, the stereotype, they could go raise VC. But I think the messaging is just difficult. Again, just double checking on Lidcoin. That continues to look very, very good. Anything else you want to cover? GSD was off a pump today, I believe. So it's already retraced a good bit as well.
I wanted to cover a couple. So one was Percolator. We kind of we're going to start that one the other day, and then we got sidetracked. Is this an actual? Okay, TCG. Yeah.
Sorry, no.
Pulp ball. I'm gonna pull this one up too. I mean, okay. I mean, yeah, it's all right.
We got them coming on next week.
Yeah, this is the narrative. This is a cards Nara runner kind of thing.
Yep.
Sympathy play, but percolator.
Sympathy play. Oof.
All right. Well, whatever. Whatever you
That's
what
rough.
do you want to call? Okay, not sympathy, not sympathy in the terms of like sympathy, but like whatever. And then yes, there is a new Meteor update. I want a DLIM update. I want to touch on.
Let me find the CA for this because I'm not seeing it.
It's perk. Oh, later and then later. Because this is $1 million and this really is a legitimate thing and it's getting totally shilled or totally, helping on it. I just posted the CA in private and then the thesis here is that there's markets, perp markets for every Solana token. Every Solana token can have a perp market. So can we cover this? Because at $1 million, if this actually works, I mean, this thing could be worth hundreds of millions of dollars at scale.
Wow. Josh going straight at it.
Well, go look at any even a GMX is at one point was worth hundreds of millions of dollars.
We're talking very, very early stage.
Very early stage.
I would say, I would speculate on the shill power of the narrative at this point until we actually see like volumes, which is the Tolly narrative and the perps narrative picking up on Solana. Like what value can that derive a token or what value do you derive a token at from that like outcome? Sure, you could compare them about GMX with GMX or Hyperliquid or whatever other perp platform, but
Drift,
it's just Drift, but it's just like, well, we can't really do that in good faith.
Okay, well, all right, then let's look at it this way. Solana is really pushing perps right now. And right now they have Phoenix Trade, Jupiter Exchange, Flash Trade, which did Flash Trade get on MetaDAO? I want to say they were doing that, but I can't remember. Yeah, Percolator did respond to this, but I think people are just laughing like, oh, have you gotten an audit yet? Yeah. GM trade. I don't know. I'm just trying to understand if you had a, thesis pump fund for perps. Okay. I don't know if you had a specific thesis on this that you were looking at.
I have not been following them close enough to know. I will say though, like a few takeaways. We had this initial run. Remember back when perps on Solana had their rise. Quanto, for example, was one that
my goodness.
Went crazy, also dumped crazy. There's a handful of these. This one was there back then. I remember this one being around back then. It survived, like it's still here. One of the only few you could say. So like that's going for it. Totally supporting, Totally hopped on calls. I don't know how far along they are with this is the only issue. I think it's very early stage. So like for me, I don't know enough. I don't have enough information, but the credence I will give it is it's still around. Team is seemingly grinding and they've Totally support, which are like three pretty big things. We're getting them on the show next week. I think that's when I'll actually have a much better decision on it to give you guys my true thoughts. Until then, again, you're playing the narrative, you're playing the perps narrative, you're playing the Totally narrative. And at this dip, you could argue that it's a pretty valuable trade. Again, you've kind of sat in this range here for 66 days and 20 hours. So like anytime you dip back in here, your downside is relatively compressed versus the upside, I guess, that could come from this being, a few million. Again, in this market, it's hard to crack into a few million, multi-million, but downside's relatively limited, I think, at 500K, right? At least for the short term. So that's the thesis I have right now. But once we get them on, I'll have a better answer for you, I think.
Yeah. Just wanted to call it out, and if they're going to be on next week, so we'll ask them these questions. Perps on new soul memes. I can't imagine how degen you would have to be to buy a long position. I mean, this is kind of the exciting thing is like to see permissionless deployed perps on all Solana tokens would be a very cool thing. I mean, and if it works, I could see it being extremely valuable because there is a moat there if your mechanism is good enough and if they can kind of create some defensibility around the code. But very, very interesting. Okay. Josh, are you still delimbing? I'm not right this second, not super actively. Just there's other things in the market that I've been trading. I got really distracted by just trading on printer, to be honest. But I will give an update on that because there is a new update for DLMing that could be interesting. The other challenge was the not being able to have limit orders. Like I really wanted take profits and stuff like that at certain points, especially when I was falling asleep. I missed out on so many tokens that had actually ripped while overnight or had dipped below my range. And it was like I was always chronically online monitoring it. Probably solve for that a little bit by sizing down a little bit, but was doing super well for what it's worth. And I will be delimbing. I will be back trading soon on that. But limit orders live, on-chain orders that pay when you get filled. So one thing about these limit orders, they're seen as you being a maker, and so you do get fees for having that liquidity sitting there when it is utilized. And then this was a good one, delimbing quote token fees. So how delimbing works is when you earn profits, you're earning both SOL profits as well as the token that you're trading. So like UNC, for instance, was one of my big trades. The problem though is when UNC decreases in price, also that your yield goes down because the UNC becomes less valuable. But what this is great for is that it's converting your UNC to SOL, for instance, as you're doing it. So your APRs are a little more kind of fixed and not so exposed to the underlying trading of the volatile asset. Definitely this is more, especially for those like earlier LPs or those, tokens that are like sub $1 million. This I think is really, really, really beneficial to have. So let's see. Soju has a 1-minute clip here. Let's see if we can watch this real. All right, there is no volume for it, and my screen share always tends to lag when I'm doing video. So let me see.
Send me the link. I'll rip it.
I'm just trying. I have my DLIM terminal open. I think that's what's causing the lag. Okay, so here we go. So here's setting order price. Okay, then you're setting your distribution, place limit order. So great. Yeah, this is so helpful. I was entering positions just in the moment because you're going to do something, you're trying to focus on work or whatever. But this then opens a position at a specific price. I really like this.
Well, limit orders are easy to understand too. Like, like you would use a terminal or something, you hop in a limit order and.
Yeah, there's two things in constructing. You can see that the first part of it was he was selecting the price that he wanted to execute the trade. And Chill was really good at kind of doing this, was like actually having a thesis on the chart. So let me see if I can, and I'll give you a specific example of where this is useful. Trying to see if I can show it again. Right there. Okay. So one of the challenges when trading, especially and part of Chill strategy was like, look for price discovery. And then you kind of are backfilling your orders as the meme coin comes down. And this happens with every one of them. Triple T, UNC did this, Allen House did this. And so that was that's how I traded it, actually, was using Chill strategy. Now, the problem is when you're in the price discovery, you don't necessarily want to buy the token because then you're really exposed to it. But if you use a bid-ask strategy with just SOL side, you're not getting enough of your liquidity in at those higher prices, and it takes some time for it to come down into the meat of your liquidity. And then also the third challenge is if you spot, sometimes even with spot, you were too exposed at the top part of the range. Now, what this allows you to do is have a limit order as it's coming down into that price range. Then you can set your liquidity. And so you're not like super exposed if you can't kind of like sit and watch the chart for the entire movement of the PA. So Yeah, I think it absolutely. I mean, you get paid for being a maker, but yes, you're right. It is for kind of dialing in your entry, I think, and not being overly exposed to the token that you're providing liquidity for. So, anyways, that's how I read it. I haven't tried this. You're gonna have to give me some time to actually experiment with this. I might try this weekend, and I'll let you guys know. Yeah, two massive updates, and we're gonna get more information on the DLIM terminal next week on Friday. We have the Legend Mirror actually coming on MCG and doing a little segment on product updates. So yeah,
Which, by the way, the Meteor team has been like unreal in terms of how much output they've done recently. So their iteration process has just been insane.
yeah. I mean, these are needed products if you're going to be building trading products. And it's just delimbing is such a novel trading positive EV. It's the most positive EV thing. I mean, this is what I was saying a month ago when I was delimbing a lot. It's the most positive EV trading I've ever done. And just in terms of you're earning the fees on top of actually trading the chart. And the flexibility of strategies, like there's certain charts where like, no, you know what, I want to do bid ask just because the meat of my liquidity. And maybe I could show an example of this. Let me see, what's a chart that's spiking right now? I mean,
Litcoin premise, I guess it has to be Solana, right?
yeah, it has to be Solana. I'll show exactly what I'm talking about.
Opal cards is doing pretty well. Opal's
Yeah,
lots of these are pulling back because the market's just
yeah, the
wrecked.
market's tanking. So don't have a perfect example, but I can show this anyways here. So like I missed Opal, I'm not gonna lie. On stream, I was actually trying to buy it, but because I love the thesis so much when we talked about it, but I just like I didn't get executed. I was waiting for dips and it never dipped. That was over here, and then it ran, and I'm like, oh damn it, like I didn't get in on that. But let's say, it was yesterday, you're looking at this chart and you're like, man, where can I get an entry? And so you can use a couple different strategies. Oh, I'm not trying to. All right, let me. Oh my gosh. Sorry, guys. Gotta click this button to get me over here. So when you're up here, if you did a bid ask soul side only, again, a small part of your liquidity would layer you in like this, and then you get more and more fills. The benefit of this is you're not overly exposed right at the top, and then your tokens are then you're holding two of the tokens, right? And if it was spot, so spot would look like this, even distribution of liquidity all the way down. But again, your fills up here as the price declines means that likely you're going to be negative on your P&L for a little bit until you get like one or two oscillations in here. So if it bounces and then back down, usually your average cost kind of comes down. So that's like what I mean by bid ask. Again, it's smaller amounts and it ladders in so that you're not overly exposed.
It's very simply a DCA, and the P&L will reflect the average entry plus whatever fees come from facilitating the trades, right? I think. But
yeah, roughly. One strategy to do real quick, guys, is do spot bid ask. That was really great because if you layer in spot, you kind of are getting filled at the top here, right? And then your bid ask portion is more like this. So again, you're getting more and more liquidity, but you have some liquidity kind of in the meat of the move right at the top. I like that strategy a lot. Nonetheless,
yeah. Other than that, I just have one thing to cover, and it's this Jurassic Finance, which raised on MetaDAO's Futardio platform. They had over 10 million of commits last time I checked, but the raise is complete. Simple thesis. I'm not sure if I'm a buyer. I'm very surprised that this did so well in this market. So shout out to the team on crushing this raise. Basically what it is they've created a fund and they will be buying fossils with that fund. The thesis is fossils they're a very novel niche item. You can buy them at, Sotheby's auction or whatever it is. And, someone pays 5 million for it. And then there's this high net worth buyer that goes and buys it for 50 million. And so the gains can be very outsized. It's an asset class that's, I guess, appreciated over time. I'm no dino fossil expert, but that's the thesis here on Jurassic Finance or the token, which is RAR, which just raised and is officially live via MetaDAO's Futarki platform. So shout out to the Jurassic Finance team. Again, these novel kind of things where it's like, okay, we're tokenizing fossil RWAs or something novel like this typically do better in a bull market. So I'm very surprised it's done so well in this market, and hopefully it works out. Maybe we can start seeing more RWAs. It came at the right time with this, I think, emergence of RWAs on Solana, though. So just kind of wanted to loop you guys in, but I have nothing really to add outside of that. Interesting, though.
I remember in the NFT days, like people were trying to shill these types of fossil like NFT raising experiments. And I think with this one, again, you're sending money into an asset that is extremely unliquid, and it's like an off-chain collector market, right? And so one thing I love these guys, by the way. I think these guys are really good, but they're very good at marketing. Like their marketing is amazing. And, again, you get a liquidity suck in the market, and it doesn't matter how good your marketing is, how good the assets that you're buying are. What happens is people sold a lot of the MetaDAO tokens, even below the net asset value of the treasury or whatever, Jurassic asset that they have. So yeah, I mean, the only area I'd buy this in is if you are passionate about dinosaur bones. But if you're not, like, yeah, I don't know. It's
yeah, I don't even think you have to be passionate dinosaur bones. I think if you're passionate and you can like quantitate the values, right? And if there are fossils that are, and it's an increasing market where things are going from $100,000 to $1 million a couple of years later, like, hey, I can get behind appreciating assets. But yeah, it is kind of out there. I think back to, man, before the NFT days, there was a token raise for buying the Declaration of Independence, I think it was.
Oh yeah.
Did really good. I actually cooked on that back in the day. Really cooked on it. But it was so out there. And it actually worked out pretty well, of course, until it, came crashing down. But yeah, it's interesting here. I think this is an example here. The auction market data is real. And this is, I think, the thesis. Ken Griffin paid $44.6 million for the Apex Stegosaurus at Sotheby's auction in 2024 against a pre-sale estimate of $4 million. Stan, the T-Rex, cleared $31.8 million in 2020. These are documented sales. The bid for top-tier specimens has clearly stepped up. What is less clear is whether the demand at the very top of the market translates into demand for the 500K to 5 million specimens that our tokenized platform would realistically be able to capture.
I like the use of the word specimens in our crypto context.
Yeah, right?
I think that's yeah, I mean, it's an interesting market. It really is. I don't know enough about the market to say if there's a good opportunity or trade here. I just know that these guys are really good marketers and they've done a good job at raising capital, but can they build a platform
Profitable.
where you need expertise, you need to know people, you need to be like, if you're getting something at auction, is it the right price, right?
Very
like
much
it's
so.
just such a hard market to value that. And it's very collector based. It's very illiquid. It's like, so maybe they solve it. Like I want them to do well, but yeah, you got to be into this market.
You got to. It's completely an expert's market, Josh. Fully agree. They need someone on board that knows it, and maybe they have it. I just haven't been keeping up enough. Crypto Jones makes a really great point, though. Why corner yourself to fossils? Should have been an antique and rare item RWA platform. Totally agree with you. I'm not going to speak for the team.
Yeah.
I'm not going to speak for the team, but I think it's just one of those situations of niche down, start here with fossils, and then we can kind of build it out to a more broad antique, rare item RWA platform. But it is a great take. Like realistically, that's what this should turn into. And maybe they've explained that vision elsewhere, but you're right. Don't box yourself into fossils because it is such a unique, difficult vertical. Maybe it's not. I don't know. But yeah, great point, Crypto Jones. And I would imagine it's in their grand vision to kind of broader their scale horizon here to antiques and rare items. But it's a great point. Maybe you should be an advisor for the team. Reach out to them.
And look, we've seen it like there's Nifty Gateway, I believe, which was doing, was it Nifty Gateway? I don't know. Anthony Pompliano was backing it, but it was like the same kind of like buy or sell RWA collector items. And again, some of these platforms, I just don't think they do enough volume to really like generate enough fees to sustain the business. But yeah, anyways, I digress. One other thing, man, I thought was kind of interesting. Was it? It's World Cup coin.
Oh, yeah, you sent this. I was like, Josh, what is this, bro? It just looks like shit coins.
That's what I thought at first, and I kind of ignored it for a little bit, and then it kept going up in price, and then I'm like, oh man, I should see what this is. So I looked at it last night, and what they've done is created pump fund tokens for every country that is competing. And then on their website, 50% of all the creator fees of all those tokens go into buying and burning World Cups or the World Cup coin. I know nothing about who is behind this thing. I don't even think it's publicly known what this is. I know. I saw it, like I said, I saw it first. Okay, but I can't even access the website now, so that's kind of concerning.
I'm always really cautionary about this kind of stuff because people have done it for all sorts of things. It's been, you know, we're gonna do all the different, I don't know what it's called, like signs, like Sagittarius, Aquarius, like I don't know.
Yeah.
Right. We've seen this for these different kind of trends, and obviously nothing ends up happening for it. I also don't think like a rev share from fees is even like, I just think if people want to get speculate on upside or success of these teams at the World Cup, it's just like go to Polymarket.
Yeah, well, that was their main thesis, is to offer an alternative to it, because people launch tokens based on events already now. And here, this is
the issue though. The issue that we found is that even if they bet on a token that wins the World Cup, that doesn't actually result in the token going up most of the time, right? And that's kind of the issue. So,
and Chili's did this. Like, this is not necessarily a new thing. Like, Chili's had the same thing. But anyways, they had all these tokens here for all these countries made. I don't know, guys. Like, probably this is like a wise fade, just to be honest with you. But
any of these got good traction, or kind of all just
some of them are bonded. So
Okay,
USA bonded. Here, let's see if we go
wow,
by
2.2 million for the World Cup coin though.
Yeah, it got listed on some exchanges. So France 150K, Spain 120, USA 52. So let's see what France is.
Soccer fans are a different breed. Yeah, didn't mean to shit on this or the thesis here, but
no, I mean, I mean, this chart doesn't look terrible for
No,
a
it
pump
doesn't.
fund token, to be honest with you. So again, I don't know because when I go to the website, you know, I'm getting something about the website's not working. So be cautious, but you know, you never know, guys. Look, you never know with these things, and you know, the World Cup's still 20 days away, so maybe give it a couple weeks, get closer, and if it starts to work or volume is doing, but if they legitimately do buy from, you know, 40 tokens, the creator fees back into the World Cup coin.
Oh, this goes the fees go into the World Cup coin, not into
Yes.
Okay, I see. So the World Cup coin is a proxy on all the fees.
So yes, so there's World Cup coin at the top, and they don't have any FIFA branding. They've stripped that away because they can't do that, right? So, and it's all permissionless because these tokens are deployed like any other token. So they have the World Cup coin at the top, and then they have all the countries listed below. And then all the fees from all those countries trading go into the main token.
Okay. The only outlying question is like why trade the token, and that's we'll see how that goes. But interesting, now that I know the one token receives all of the fees.
Yeah, I thought it was an inch. I've never seen the mechanism before, and I thought it was pretty fascinating. So
there you go.
And like the France chart actually looks kind of decent. So
there you go. I'm good on the day, man. Let's wrap it.
Yeah,
It's a Friday. We've been live for 3 hours and 17 minutes. What a week, man. Great week. Come back from Miami exhausted, and we just packed it out. Next week looks great too. So love it, man. It's been such a good start to the year. Over 200 interviews. We just got the Ansem retweet, the Solana retweet, another retweet. Like that episode we did with Cards yesterday has like 70K on the main episode already views. So great week, amazing guests. Next week's gonna be a banger. We love you guys. You rock. Josh, you want to leave the people with something?
Yeah,
Last
thank
Mr.
you.
Nichols?
Thank you for everyone who's been on the stream for the last year and has helped us build this this brand. And we appreciate all you guys showing up all the time. Crypto Jones, Ave, Bitsy, we see you all the time on here. Appreciate you. This is Coliseum Frontier winner, by the way. I love it. I didn't know that actually. Wait, it's not Berwick Law.
Not Berwick Law.
Archeon. We'd love to have Berwick on.
Jeez.
Talk about the Believe situation. Rodney, seen you a few times, but anyways, appreciate all you guys. Means a lot. So enjoy your Friday. Yeah. Well,
Thank you. We're gonna be here. We're gonna be outworking everyone for the rest of the
we do outwork people. Like we do legitimately. I don't think anybody covers the space quite like we have. And if they have, like, point us in our direction. I want to learn from them. But
dude,
like, we've seen streams drop off rather than pop up and be good.
Bro, I have like my DMs are flooded with people that are like, hey, give my friends of the show, like, give my product a try. I want your feedback. I want you to beta test. And I'm like, dude, I got you. I'm gonna get to it. Just keep pinging me because like no time in the day to get everything done, man. I wish we had an extra 10 hours in the day.
Yeah. And if you're a crack dev and you have a really cool product and business and you want to partner, let us know. We're looking for ways to generate revenue outside of the media side. And we're looking to do joint ventures with really great products. So if you're the next FOMO app, we definitely want to know. And hopefully one day we can do something with that for the community itself. But yeah.
Absolutely, boys. All right. We appreciate y'all.
See you guys.
Peace.